All right, so what I want to do today is I want to talk about how to trade RSI profitably. And RSI is obviously incredibly popular. A little bit about me: I manage the #1 stock newsletter in the country. I don't manage it now, the #1 mutual fund in the country. And I've been doing this for 50 years. So I've been around the block, been using RSI for about 35 or 40 years. And actually know the guy who invented it, Wells Wilder. So what is RSI? So let's dive into this. It is a momentum oscillator. So what that means is that we have trend following indicators like moving averages, but we also have a second class of indicators called oscillators, which measure the momentum of the market. So if the market is skyrocketing up, the oscillator will be straight up. But when the market starts to slow down, the oscillator will start to turn. And typically the reason why people like oscillators is because they often lead price action. They don't follow price action like a moving average. They can lead price action, and that makes them very attractive. Now, the history of RSI was originally invented by a gentleman by the name of Wells Wilder, who wrote a book called New Concepts in Technical Trading. It's an excellent book. I highly recommend it. And I wouldn't recommend any of his other books, but that one is a fantastic book, and we use many of his indicators, and they're just standard on different chart services now. So basically, what he did was he came up with an oscillator that was much better than what existed before he invented RSI. RSI stands for Relative Strength Index. So he normalizes everything. He puts it all on a scale of 0 to 100. Prior to Wilder, we used what was called rate of change, which had no scale at all, really. And so what we can do is we can then see these things clearly. Now, there's a couple things I want to get away right away. RSI, I think you're all familiar with it. If you're not, ask me a question. But basically, what happened is that when you look at the scale of RSI, it's 0 to 100, and then you'll see a horizontal line at 70 and a horizontal line at 30. And basically, the whole concept was that if the RSI got above 80, the market was overbought and was about to end the bull market. And if it got below 30, it was oversold, and therefore it was about to end the bear market. So the idea is that by being above 70 would tell you when the bull market was about over, and below 30 would tell you when the bear market was over. But let me give you one tip right away. Right away, let's start to make some improvements on this very valuable indicator. So if you're in a clear bull market, a big bull market like the stock market has been basically in the last year, maybe not the last couple of months, but let's say the first 10 months after March of last year, what you do is you change the scale and you move overbought to 80. So in a clear big bull market, overbought becomes 80. In a clear big bear market, you don't say it's oversold at 30, you say it's oversold at 20. If the market is neutral, use 70 and 30, but adjust the scale of where overbought and oversold is when the market's in a clear bull or bear market. And you'll get much better results by making that one simple change. So let's carry on here. So we're going to talk about divergences. We'll talk about that in a minute. We're going to talk about crossing the 50 line. We're going to talk about elbows, and we're going to talk about other stuff. Let's get into it. So what is RSI? So it was first published in 1978, and there's the formula of it right there. RSI equals 100 minus open paren 100 divided by 1 plus RS. But the critical thing you need to see is What is RS? Well, RS is the average of positive closing changes for the last 14 days divided by the average of negative closing changes for the last same number of days. So RS is the key here. So if you've got the average of, let's say, all your up days were up 10 points and all your down days were 5 points, then RS would be 2. And then by adding in the 100 minus 100 divided by 1, it puts it all on a scale of 0 to 100, which makes it much easier to follow. So write that down. Whenever you listen to me talk, you should always have a piece of paper and pen nearby. There's the formula for RSI. You can get it on the internet too. So if we add up all the points gained on up days in the last 14 days and divide them by 14, then we add up all the points lost on the down days and divide by 14. And RSI is simply the ratio of that. Now, a lot of people ask the question, why 14? And what Wilder said is that 14 is half of a price cycle. So he subscribed to the idea that prices followed the moon. Okay, I kid you not. I'm not kidding you this stuff. I was around when the book was published. So he said, we want a half cycle. Now, there's no real proof that prices follow a 28-day or moon cycle, basically. So, but 14 seems to work very well. Now, a lot of people, particularly just after he came in to do this, they said, no, we want a short one. 9 days became very popular as well. So we don't want to be stuck just on 14 days, but you could look at 9 days. Now, for my own trading, I started using 14 days in 1978, and I've been using 14 days. I've tried other days. They all work fine. One of my favorites is the 2-day RSI for swing trading. And I'm not going to talk about that in today's presentation, but look at the 2-day RSI for swing trading. It's awesome. It's awesome. But for position trading, we want 14 days. You could try 9. Now, I use the 2-day for swing and day trading. I use the 14 for position trading. All right, let's take a look at an example here. These are examples from a few days ago when I put this presentation together. And this is the S&P futures. And you can see here's RSI on the bottom. It's on a scale of 0 to 100. There's a horizontal line at 70 and a horizontal line at 30. These are the traditional factors that we use whenever we talk about RSI, 30 and 70. And the basic idea is that if it gets above 70, like it did here in April of this year, that means that it's overbought. And we saw it again over here in early July. That means it's overbought. And then a lot of people, they say, well, as soon as it breaks back down below 70, you should sell short. So you would get short right here. Not very good. How about getting short here? No, that's pretty bad too. So that idea doesn't work. Okay, now I'm just using 2 examples, but it doesn't work. So let's take a look at this a little bit closer. So if we want to use it as an overbought, oversold, then really a better way, if you're going to say overbought is above 70 or 80, as I suggested earlier, don't go long when a market's overbought. That's usually going to be a losing proposition. Don't go short if the market's oversold. But should you take profits? Well, that's probably not a bad idea when you get up near there. Now I'm going to show you a chart here in just a second. So here's the same chart, only what I've done is I've put these arrows saying this is where you would have gotten short if you sold the market when it got above 70 or took profits. Either way, that's not a very good place to take profits, or maybe it's not a bad place to get long. Like don't get long, but do you want to get short here? No. Do you want to take profits here? No. Do you want to get short here? No. Do you want to take profits here? No. So Here's the way I would recommend playing it. You might want to consider, definitely don't go short when it gets overbought, because some of the biggest bull markets in history occur when RSI is overbought. So instead, you might want to look at this and say, it's overbought, which means that the bull market is getting old in the tooth. And so what I'm going to do is I'm going to wait until there's some type of a short-term signal before I liquidate my trade. So for example, here we might say, well, it's got to make a lower close than the previous 3 closes. So maybe I'd take some profits here. Another possible thing is I want a reversal bar down. I won't get into reversal bars, but that would be getting out over here. Over here, the lowest close in the previous 3 days was right about here. That's a better place to take profits. And then of course over here we were down a little bit harder, but I don't really like using it, quite frankly, as an overbought or oversold indicator, because I mean, it just doesn't work very well. You're struggling all the time to find situations where it's overbought and that's the high of the market. It's usually not. It's usually not. It's at least not on foresight, maybe on hindsight. But here we have a major bull market. The market got overbought and it just kept going up. So in major big bull markets and bear markets, this is a useless indicator. But wait a second, I'll show you how to make it useful in a minute. But this is the classic way people use it. It just simply doesn't work. Okay, now let's take a look over here at Google. And I'm going to do the same thing. This is a pretty good bull market, but it's not a monster bull market like the S&P was in. So here's the point where we first get above. I put the same points here. So that one was a terrible sell. That one, not very good. That one was pretty good. That one was terrible. That one's okay. That one's okay. A little premature. That's okay. So it worked better in Google than it did in the S&P because Google was in a up and down market, although it was a bull market. So it can work better, and it actually works better in sideways markets. But let's now start talking about some things where we can actually make some money here, okay? Let me go back one page. When we start to try to fade the market, that's almost certainly a losing proposition. One of the oldest things that traders know is that the trend is your friend. They usually leave out the part until it ends. But the trend is your friend until it ends. And trends persist much longer than people expect. And so they say, oh, it's overbought, well, but then it gets more overbought. So that's why this system doesn't really work that well. And Wilder's suggestions on how to use it don't work either. So let's talk about this. How about using it as a trend following system? Simple rules. Buy when the RSI goes above 50. The stop loss, pick a recent low, and then take profits when RSI goes above 70. Now, this is actually a profitable system, and nobody uses it, so you'll be the only one using it. How about that? Or we could go short. Sell when the RSI goes below 50. Stop loss is a recent high, and then take profits when the RSI goes below 30. Now, why the 50 line? Because remember, the definition of RSI is all about when the sum of the up days is larger than the sum of the down days, then it goes above 50. In other words, by definition, when that occurrence occurs, it's a bull market at that point. If the average of down days is larger than the average of up days, that can't be a bull market. So 50 is the dividing line between bullish and bearish on RSI. So let's just buy it when it closes above 50, put a stop loss at a recent low, and then take profits when it gets overbought. This is a profitable system that I'm showing you here. You can make money on it. It's not the way I usually use RSI. I'm going to show you the way I use it because that makes me a lot more money. But this is a way to take RSI and turn it into a profitable mechanical system. You can go and back test this and see that it works. So let's go back over here. What are we looking at? We're looking at Bristol Myers. So we cross over the 50 right here, and we would take profits when it crosses above 70. That's over here. So that's a pretty good trade. We go and we buy it again here. And I don't think we get above 70 here. So when it goes back below 70, we get out, and that would be here. So that's still a profitable trade, but we just missed taking a profit up at these highs. But c'est la vie. Okay, here we go again. We break up above 50, beautiful buy. We don't get above 70. So when it goes back below the midpoint, we get out here for a small profit. Couple days later, goes back up above 50, bingo, still can't take profits, but we get out on this day here for a small profit again. So this is not an easy market to trade. It's very choppy, and we were only able to really take profits once at the high, but even stopping out when we break down below the 50 after buying,
Hey, Courtney, sorry, we lost audio.
so that's pretty good. That's pretty good. So you see that the entry is at the right time of entry. The exit, if we get above 70, is a great place to take profits after we've broken 50 to the upside. So this is a pretty darn good system. Okay, pretty darn good system. All right, let's carry on. Okay, I think we had a little problem with my internet again, but it should be, everything should be working right now according to what I see. Let me just double check. Yeah, looks like everything's okay now, but I don't know, the internet here kind of flaked out on me. What can I say? All right, so we've taken RSI, which is supposed to be a momentum oscillator to tell us when it's overbought and oversold, and we've completely flipped it on its head to make it a trend following system, which is profitable. And then we still use the original concept as a profit-taking goal for our trade. So but I'm still not to the point where I really use RSI very much, but this is a nice, good, solid little system. Okay, not one of my best, but it's pretty nice. It's pretty good, works, not a lot of losing trades. So that's a big plus as well if you're a position trader. But let's try to carry on. So I'm about to show you an innovative way to use RSI, okay? And it's really very tricky. It's a little bit tricky. So what we're going to do is we're going to use trend lines on the RSI indicator. Now, first of all, let me back up a little bit. Notice that what we're doing here is we're hardly looking at prices at all. We're trading prices by using the momentum only. So this is just by itself an innovative concept, okay? Like everybody trades price. I certainly trade price, but here what we're doing is I'm showing you how to trade price, and I could completely obliterate the top of the chart and still keep putting on trades. So this is a really interesting concept, and the concept goes back to the basic theory that momentum oscillators either are leading indicators of price or coincident to price. So think about that deeply, how to trade without ever looking at the prices at all. And that's what I'm showing you how to do here. Totally innovative. Okay, this technique here that I'm teaching you, I call mother-in-law. And I call it mother-in-law because you better pay attention. So we're going to draw trend lines across the bottoms of RSI, not of prices, of RSI, and sell when the RSI breaks the trend line. Then we're going to draw trend lines across the tops and buy when RSI breaks that trend line. So that's the whole system. Now, there's a couple of times when it breaks down, and hopefully in my examples we'll find one of those, but 90% of the time it works really good. So let's take a look, shall we? So what are we looking at up here? We're looking at ExxonMobil. Now, that's not a particularly great bull market at all. So it's a good example of what we want to be looking at, all right? So here we have RSI. You can see that RSI is in a bull market. Now, how do we know that? Because it's making higher highs, it makes a low. I draw a trend line through the low, and I extend it out. I get short when the RSI breaks below this trend line, okay? So that's getting short up in one of these days right about here. Pretty impressive, pretty impressive. If you were long for any reason, that would be in a great place to take a profit. Okay, so now I'm short, so now I have to take the top, so there's a top there, and there's a top there, and I draw a trend line on them, and it breaks the trend line here. Once again, a spectacular place to be a buyer. Okay, let's do the same thing. Market goes up, and finally we get a bottom here, so finally we get to draw a trend line. It breaks the trend line, I think probably on this big down day here. Still bought here, sold here. That's a thing of beauty. Now, here's what one of the things we have to do. So we got short, and it didn't really go anywhere. Now, this is where the system breaks down because I don't really have a buy point, right? I connect the highs, and it never really breaks the highs. You see that? So then the highs start coming at a sharper angle, so I connect those highs because the first high and this one just didn't work at all. We buy the break here. That's an incredible buy point. So what I discovered when I was putting together this system called mother-in-law was that what was happening was that momentum oscillators are supposed to be leading indicators of price, leading or coincident. Okay, let's just leave it at that. Let's make it simple. So I said to myself, okay, but what if I could actually get into the momentum oscillator quicker? In other words, what if I didn't wait for the momentum oscillator to move? What if I actually found an indicator, and in this case I used trend lines, to enter the trade even earlier? So that's what's happening here, is by using these trend lines, which, as I say, don't work all the time, but when they work unbelievably well. I'm catching the momentum at the beginning of the change of momentum. So we get a nice buy, we get a nice sell up here. You see what I'm saying? So there's a lot of different things here. Now, like I say, you're gonna have to, every so often, there's gonna be a situation like we get short here, and there's really no downtrend line. There's really no place for us to put a stop loss. So before you get short here, you could take profits here. You don't really want to get short because your logical stop would be this high way up here, which is really too far away for risk management purposes. So you're going to want to do, Pradeep asked the question, he says, you basically try as much as possible to use a break of the trend line to enter and the next break of the trend line to exit, okay? enter and exit on trend lines. If you don't have a trend line, like if when we got short here, there was no trend line, then you probably want to pass on the trade or try to find a nearby, in this case, high, in order to stop yourself out. Now, in this case, the high was a long way away, but a lot of times they're very close and they become very good stop losses, okay? So mother-in-law is we're taking what's supposed to be a leading indicator and then we're creating a leading indicator of the leading indicator, okay? Now, part of the reason I'm teaching you these things is so that you can, I'm trying to also open your mind to how to design systems that make money. There's so many ways to take an ordinary system and turn it into a profitable system. And I have some techniques which any type of breakout system I can make profitable. There's just no question about it. I have a student who hasn't had a losing trade in 3 months because of some changes that I showed him how to turn systems that are losers into winners. So, you know, that's kind of amazing. Raj, I answered that question before. I use the 14-day for position trading. I use 2-day for swing and day trading. Okay, so this is pretty cool technique. Mother-in-law is an innovative way to use RSI. You've never seen it, all right? Raj, you showed up late. Watch the video. Okay, let's carry on here. This is the way I really love using RSI, and that's divergences. Because if a momentum indicator is diverging from the price, that's important. So what do we mean by divergence? Well, what we mean by divergence is when, let's take this first example here on the left. Prices are making higher highs, but the RSI is making lower highs. Over here on the right-hand side of the chart, the price makes a higher high, but the RSI makes a lower high. That's a divergence. And in each of these cases, what we see is the market had a sharp drop after the divergences. And divergences is where we go back to the original concept, and we see that the momentum is weakening, it's weakening, it's weakening, and finally collapse. Over here on the right-hand side, the momentum is weakening, collapse. So the momentum, when you use RSI in divergences, it really does work as a leading indicator of significant trend changes. So you can either be taking profits on your long positions, or you can look for setups to go short. So divergences are not a trading system by themselves. They don't tell you where to buy or where to sell. But what they do tell you is there's about to be a trend change. There's about to be a significant counter trend move. So get ready, don't be an idiot. So if you're here and you see that it's making higher highs, but the momentum is not, you got to say, you know, I got to be looking for reasons to get out of my long positions. I got to be looking for reasons to get short. So now you bring in a second technique like mother-in-law, okay, or the trend following line that I showed you earlier, either of those two systems, and you use those to go short, But you definitely have to be looking for reasons to get out. So here's two examples of divergence. You'll see this is about 5 months of price action. We had 2 of them. That's pretty typical. You'll see cases like here in the middle of the chart, we were making higher highs. The RSI was making higher highs. So there's no information there at all. There's nothing to do. You just have to follow the trend. Let's take a look at some more examples. So over here in the middle of the chart, we had prices making lower lows, but the RSI made a higher low. Divergence, and sure enough, the market popped. Over here on the right-hand side, we saw the market make higher highs, RSI made lower highs. Sure enough, the market collapses. It happens 95, 98, I mean, some ridiculous number of times. So the key is you have to train your eye. to see these divergences. That's the tricky part of doing it. But once you've done that, it becomes one of your most powerful tools that you'll have in your toolbox for making money. Now, you may say, well, does it work in stocks? Well, our examples so far have all been stocks. Does it work in futures? Yes, of course it works in future. How about Forex? Forex too. It works in everything because momentum tends to lead price action. And by looking at divergences, you're seeing the clearest, most obvious changes in momentum. The market isn't going up anymore. The momentum of the market is going down. And the principle you must always remember is that momentum leads price. All right. So there I've given you 3 different techniques, 2 of which I use, 3 of which I use. I've given you 4 techniques, 3 of which I use and are very, very profitable. And the let's see, Raj is asking, is there an indicator to show there's a divergence? Your eyeballs are the only way to know. You got to train yourself to see the divergences. Now, the thing is that there's 4 techniques I've jammed into like 20, 25 minutes. So I recommend that you go back, and when this presentation is over, go back and watch the video that Anna's going to be sending to you, because I'm talking fast, because unfortunately my internet died twice, and because I talk fast anyway. When you've been a professional trader on Wall Street for 25 years, you learn to talk fast, okay? You learn to eat fast too. So 3 techniques there from different perspectives. I showed you trend following, I showed you divergences, and I showed you mother-in-law. Mother-in-law is innovative. As far as I know, nobody does anything like that in the world. So you're seeing a very innovative approach to making money. Now, Raj says, good presentation. Thank you. Thank you, Raj. I appreciate your appreciation. Okay. He says he'll definitely watch the recording. Okay, you missed the beginning. Well, the beginning just tells you what it all is, right? What the scale is and that sort of stuff. So what we've done is, if you liked all of that I've just talked about, we put together a course called Stock Success School 2021. Why 2021? Because it's all new this year. So that makes it pretty interesting, all right? So let me just quickly describe it. What are you gonna learn? Well, you're gonna learn some amazing things, like how your parents screwed up trading for you. You're gonna learn about how brokerage house analysts are idiots and how you can make a fortune from their idiocy. You're gonna learn things like the one rule that 90% of retail and institutional traders use that nearly guarantees they will underperform the market. Okay, this is all innovative stuff that you've never seen in any other course. Why? Because I've been doing this for 50 years. Gives me a different perspective. You're gonna learn how you can buy high-flying stocks that are really cheap. You see, everybody wants to buy high-flying stocks, but you pay too much money for them, you're going to lose money. So you got to find the ones that are really cheap. And I'm going to show you how to do that in the course. Now, this is an interesting one. I'm going to show you how to conquer any type of fear. Public speaking, heights, I'm afraid I've got cancer, and also I'm afraid I'm going to lose money trading. I'm going to show you 2 techniques on how to conquer any type of fear so you won't feel any fear at all. I'm going to teach you how to know if management of a company is doing a good job or not in just by looking at one number. Pretty critical. And I'm going to give you one critical rule to guarantee you never lose all your money. So a lot of people, they start trading and then they lose all their money and they go, how did that happen? Maybe they'll blame it on other people. Oh, the market makers picked me off. No. I'm going to show you how to guarantee that never happens. So I'm going to tell you how to compound your money geometrically instead of arithmetically. Now, if you know anything about math, you know that geometrically means you're going to get rich much quicker than if you do it arithmetically. I'm going to teach you a unique way to diversify, but not diversify by buying 30 stocks, but by using different time horizons. I'm going to teach you how to create a new identity of a professional trader. Let me explain this one very briefly. You can't do anything unless you have the identity of that thing. So for example, I recently lost 25 pounds. How did I do it? Did I change my diet? That wasn't the key. The key was I said, I'm a thin person. Now, I'm still not a thin person, but I said, I'm a thin person. And then I said, well, how does the identity of a thin person act? Well, they don't eat 4 scoops of ice cream on top of apple pie. That's not how thin people, that's not the identity. Thin people don't do that. So no matter what it is you want to do, you have to have that identity. So right now, everybody on this call has multiple identities. I'm a father, I've been a husband, I've been a son. You see what I'm saying? We all have different identities. I've been a boss, I've been an employee, I've been a business owner, and so on and so forth. So we all have multiple identities, but the only way you can become a successful professional trader is to have the identity of a professional trader. And now you have to act like a professional trader all the time, okay? That's why I say you need to know how to create that identity or you'll never be successful. How to double, triple, or more the profits of everybody you know without taking more risk. I'm a risk taker. I know that. My whole life I've been a risk taker, no question about it. But I hate taking risk and I hate losing money. So what I've done is focus on risk management at a level that very few people do. And I'm going to teach that risk management in this course. So you're going to get modules and modules of bite-sized video lessons, downloadable software, how to set up the settings on the charts, things like that. Here's the outline of the course. I'll just very quickly go through this, how to have a mammoth wealth mentality, because all of you know the psychology of trading is the hard part. How to control risk so it doesn't control you. Second most important thing, how to pick stock rockets and how to pick the ideal time to buy or sell. Those are the 4 major sections of this course. So in a nutshell, you'll learn everything you need to know to crush the market every year for the rest of your life. Now that should be worth a lot of money. And I'm going to include this module here that you're participating in the course, okay? So I'm going to add RSI to the course just because of all of you. But if you're making money every single year in the stock market, now let me tell you one other thing that's very unique about my approach, because as you can see, just in these few minutes that we're together, that I look at the market in a very different way than everybody else, and I'm going to explain why. I've spoken to over 1 million people in my speaking career, and I ask the question, do you want to beat the market? And everybody raises their hand. And I say, that's the wrong answer. The correct answer is, I don't want to beat the market, I want to make money. Because if you beat the market, that means in 2020, when the market's down 35% and you're only down 34%, well, you beat the market, but you're still down 1/3. That's called relative return investing, and that's what nearly everybody does, but I don't. I do what's called absolute return investing. Why? Because I make a living as a trader. And if you make a living as a trader, it means you need to make money every year. So if the market's down 36%, your job is to make money. Your job is not to beat the market. Beating the market, who cares? Your job is to make money. And I want to make a lot of money because I don't want to eat oatmeal, I want to eat steak. So I need to make money every year, and I have made money every year for 50 years. So we sold this course for many, many years at $4,000, but you can claim it today. You can claim it today for only $397. Now that's special for you. That's special for the Investors Expo audience here. And the purpose I'm cutting the price so much is just because I know if you take this course, you're going to buy more courses from me because these are unique courses and I teach you things you can't get anywhere else. So this is a little over $1 a day. So courses like this don't cost anything. I'm charging you $397, but it doesn't cost you $397. It pays you money because you're going to use the techniques like the techniques that I taught you here today. You're going to make money. You think you can make more than $1 a day? Yeah, I think so. So this is peanuts for the value you're going to get for the rest of your life. Now, in addition, I've got some bonuses here. Uh, right now, we can't do any of the live stock success schools because of COVID, but when COVID ends, we will be doing live courses all around the world. I'm here in Dubai, United Arab Emirates right now because we're doing one of our stock master class, but we'll let you come to that class for free. That's the $4,000 course, and we'll let you bring a friend. So today only, invest $397 for a lifetime of profits. It's really, I can't even say it's cheap because it's free, really. So all you have to do is go to sss2021.com or text or call 702-718-8588. Now, let me just see if we got any questions. Okay. Trader says, let's see, great presentation. Thank you, Raj, I will. Okay. Trader says, I was late, but this was fascinating. Listen, I have spent 50 years of my life trading, and I've written 10 books on trading. I have spoken to over 1 million people. I've trained over 1 million people how to make money in the market. This is my life. Trading is my life. I live to trade. I trade to live. And I realize now that I'm a little further on in years that I want to pass on my knowledge to other people. I want to pass on my proven processes to you so that you can have the benefits of the kind of life that I've had in my life, which has been unbelievably exciting and gratifying and really a wonderful life because I was able to trade to make a living. And now in this stage of my life, I'm passing it on. And there's not many people that are going to pass on this kind of knowledge to other people. Most people, they kind of hoard all this information, if you know what I mean.
So much. It's so great to be here. And today we're going to talk about simple tools for finding profitable big move trades without risking your capital. My name is Jody Samuels, and I'm going to teach you something today, discuss something today that I am very passionate about. So let's get started. Here's the disclaimer that you can read to yourselves. I'm going to leave this until the end, talking about getting funded in our program, but I just wanted to put it out there. The Trader's Pendulum, The 10 Habits of Highly Successful Traders, this is a book that I wrote, several years ago now, and we're going to start this presentation talking a little bit about the Trader's Pendulum because I think it's important in understanding the emotions behind trading as well as the financial pendulum and the market pendulum that traders face. So here we go. The market pendulum is about the markets moving up and down. Now, I am an Elliott wave specialist, so when I look at a chart, what calls out to me is, where are we in the market cycle? Are we in a trend? Are we in a sideways move? Are we in a steeper correction? Are we at the end of the trend? Those are basically the 4 areas that I'm interested in knowing about. So the market pendulum is all about the market cycles. So moving up in trend and then correcting. And of course, the same is true for moving down and then correcting up. So that's really the market pendulum. The financial pendulum is about making and losing money in the markets. Now, all successful traders make and lose money in the markets, but the key is that you don't bet the whole ranch on any single trade, because then you could easily lose your capital. So for that, the financial pendulum, as long as you understand what your edge is in your trading system, trading strategies, and you understand how you perform using it, that's the key to improving your results. So even if a trading strategy is 85% successful, it might not be 85% successful for every single trader. You can put 10 traders in a room, give them the same strategy, they will all trade it differently. Why? Because the emotions kick in. So let's talk about the emotional pendulum now. I like to look at the emotional pendulum on the fear and greed continuum. So on one end, we have fear, we're afraid to pull the trigger, and on the other end, we have greed. We get very excited about the move, and we just want to load up, when maybe it won't be so profitable to load up at that point. So let me show you what I mean by that by looking at the market map. This is the 8-wave market cycle, and you can see some numbers here and some letters here. In Elliott wave terminology, the trends are always labeled in numbers. So wave 1, 2, 3. Wave 3, this is usually the strongest move, and this is the wave where you can almost get in everywhere and make money, unless you get in at the end of the wave 3, of course. Then we have a wave 4, which is the correction of the wave 3. And this is really the trade that we're going to talk about today. What happens after we correct a wave 4? We move up for a wave 5. We're also going to be taught, and up here, this is when traders are very greedy, they're optimistic, they're exuberant, and then they load up when it's really the end of the trend. Then we have a serious correction. So after a trend, and it can be an extended trend, we have a serious correction, and we label corrections A, B, C. At this point, after a C wave, fear sets in, and if we are long up here at the end of wave 5, down here, we are panicked, we're discouraged, we're ready to bail. And most of the time we do bail. Now let me just explain a little bit about the personality of this wave. When we move down for a wave A, and then we move back up again, some optimism sets in again with traders, and thinking that, oh, great, I'm holding my position, I'm great now, we are going to take out this previous high. And then what happens? The market turns around again, and we have this serious move down in a wave C. Wave C personalities are similar to wave 3 personalities. So I want to show you a way today how to avoid this trap. This is called the B wave trap. How to avoid being exuberant up here and being discouraged and bailing down here. In fact, Warren Buffett said, be fearful when others are greedy and be greedy when others are fearful. That's a contrarian view. So what he's saying is, up here, we want to be fearful when others are greedy. We don't want to, we might have FOMO, but we don't want to be greedy. We don't want to load up here. We want to change the brain so that we are fearful up here and we just want to get out. And then when the market moves down, now's the time to be buying. And we want to be greedy when others are fearful. Not so easy to do, but I'm going to show you a way to make it easier to do, because we really do have to train the brain. One way of training the brain, by the way, is just to experience this over and over again, where we don't load up here and we actually sell, even on a demo account, and then we load up down here, because then we're training our brain to act differently up here, when previously we may have had fear of FOMO and we've bought at the top or sold at the low. So today we're going to talk about how to anticipate market direction by reading the market map. We've already covered this. How to locate and trade with confidence, my wavy tunnel breakout 4, the wave 4 and end of trend trades using our scanner. How to identify the wave 4 trade, how to scan for and trade the wave 4, how to get out near the top when others are buying, and how to get in when others are selling. Most importantly today is to recognize the wave 4 trade. Anybody can recognize it, and how to trade it. Then at the end, I'm going to show you how you can join our Wavy Tunnel Pro, program, which starts this Sunday. It's a 5-day accelerated training, and get funded. Okay. This is important for you to know because the market is getting complex. It's more volatile these days. Emotions are the Achilles heel for traders. And you need a system that removes the emotions. You need to filter out the quote bad trades. And if you're planning to follow trade recommendations, you need a foundation first. So I can't tell you how many traders have come to me and said, oh my gosh, I'm subscribing to this recommendation and that recommendation, and I don't know what I'm doing. Fine, you better figure out what you're doing. Your capital is likely limited. You blow up your account and you might not get a second chance. What process did I follow to remove any hint of doubt, uncertainty, and to overcome starting the month $2,500 down to finally become an established retail trader, profitable retail trader? Yes, that's right. When I first started, after I left the bank, I worked for a global investment bank on Wall Street. That was my start for 14 years in Forex. So I traded currencies. And when I left the bank in the mid 90s, I started the month $2,500 down because that's what I had to pay for data. So I had to pay for charting data. The Forex market wasn't established yet. So I traded futures. I traded 20 different futures markets. And every single month, I had to cover that $2,500 down. Today, data is free. Aren't we lucky? Technology is wonderful. So let's get started. Simple tools for finding profitable big move trades using the market map, which I showed you, to buy low and sell high. In my system, I follow three things. First thing is the analysis, looking at the market map, deciding, oh, are we in a trend? And I do a top-down approach. Are we in a trend? Are we in a correction on the smaller time frame where I can pick up the trend? This is part of the analysis. Then we define our strategy and we we have our strategy that we feel comfortable with, that we use to take our trades and develop our trade plan. And finally, we finesse our trades. Trade management is really very important, as is money management. That's key to successful trading. If we can increase the size of our wins and decrease the size of our losses, we will have a better performance record, even if the strategy works 50% of the time. I'm not going to go into that, but you can think about that, and I'm sure you will agree with that. So this is the market map. We have the 5 waves up and the 3 waves down. By the way, at the beginning, typically we can have a double bottom here, just in terms of wave personalities, where we have a wave 1 up and then the wave 2 correction. Sometimes the wave 2 corrects all the way and we can take a trade down here. And then we have a strong wave 3, 4, 5, ABC. Now look at the wavy tunnel strategy setup on the right. It looks very similar to the 8-wave market cycle. Why? Because it is. And this is an ideal market map using our strategy. So when we have this ideal setup, we have trained the brain to know exactly what to do when we see this setup. And we're not going to see this setup all the time. But if we're trading enough markets and we have a scanner to show us this setup, and I'm going to show you that, how cool is that? So what we're going to do is figure out what this point is so we can go into the market at this point, at the end of wave C. How to locate and trade with confidence the wave 4 and end of trend trades, how to identify the wave 4 trade, how to scan for it, how to get out near the top when others are buying, and how to get in when others are selling. Let's start with the breakout 4 trade, which is right here. That's the wave 4 trade, okay, which can be over here as well. But this is where we want to train our brain not to be buying up here, but to be buying down here. Up here, we also see divergence in the awesome oscillator. Okay, not always. Sometimes we just have an awesome peak up here, But when we see divergence, that is telling us that the market is running out of steam and that we should seriously look for signs of a reversal. But I'm going to show you all that. So this is Berkshire Hathaway. Look what happens. We have a move down, and that's the entry. We have a move down here, Walt Disney, a move down here, that's the entry. So how do we know when to pull the trigger? How do we know the trade won't backfire? How do we tell our brain it's okay to buy when the market is selling? So how do we know when to pull the trigger? I'm going to discuss that with you now. How do we know the trade won't backfire? We don't know. I mean, it's quite possible that the market is in a total reversal, but we have some clues to weed out the low probability trades, which I'll share with you. And how do we tell our brain it's okay to buy when the market is selling? Well, that's just about training the brain, because it's not intuitive to buy when the market is selling. We feel like we're being run over by a train. So we have to train our brain by practicing our execution skills, and by seeing these setups in the market, and by just taking the trades over and over and over again. That's how we train the brain. First, let's feel the fear. Has anyone done this? This is Roku, where they've bought here, they've sold here, only to watch the market go up here, and this is where they get FOMO, and they load up, they buy again, because they don't want to miss out. And they think, they're kicking themselves. Why did I sell out over here? And then the market moves down and they bail. Or this, Facebook, same story. We buy, we sell, we buy again, and we get out at the bottom. This is UPS, same story. We buy, we sell, we buy, and we get out at the bottom. Notice the pattern. Notice how this is the market map, the ideal market map in all of these charts. I have it up to the left. Or Amazon, we buy, we sell, we buy, we load up, we have FOMO, we're optimistic, we're exuberant, and then we bail. So if we had done that with these 4 stocks, we would have experienced significant drops, okay? Significant drops. So let's try to change that mentality, that thought process, by remembering the kids' game, Hot Potato, where you stand in a circle, play the music, pass a potato or a beanbag around the circle, and when the music stops, the one holding the potato is eliminated. This phrase originated in Great Britain in the 1800s and derives from the literal meaning that baked potatoes are very hot to the touch. Therefore, people are always very cautious when handling them. You would have to try to get rid of it so quickly you did not get burned or avoid the potato altogether. I urge you to keep this image in your mind of being the last person to hold the potato when the music stops. Don't be caught holding the beanbag or the hot potato because it burns. The next time you feel that adrenaline rush from the market, check your pulse. See if you're holding the hot potato. I think if you keep that image in your mind, you might be better off the next time you get this feeling to buy when everyone else is buying. So let's change it around and let's do what Warren Buffett suggests and feel the fear up here and then feel the greed down here. This is really what I want to just get into you today. So, but look at this beautiful uptrend. Trends don't go up forever. They do correct. And this is what happens when they correct. They can move down significantly when we have a huge trend move. But let me show you how we can tell, going back to this example, how we can tell with our indicator set that it's time to buy and it's time to sell. At the top of the market, we're going to see this purple arrow. When we've corrected, we are going to see a gray arrow. Also at the top of the market, the yellow is going to be in the upper reversal zone. When we've corrected enough, the yellow will be in the lower reversal zone. Never during this move down does the yellow get into the lower reversal zone until here when we see the gray arrow. Look at this, same thing with Facebook. Purple arrow on top, yellow line on top. Look at this three-wave correction. This is an extended correction. Over here, the yellow is not in the lower reversal zone. Here, it's not in the lower reversal zone. Here, we have a gray arrow, and yes, it's in the lower reversal zone. Here's UPS, same story. Purple arrow, yellow in the upper, gray arrow, yellow in the lower. And finally, Amazon, purple upper. We have a lower gray, and you can certainly take a trade on a lower gray, but just know that the strategy that we are using is we want to see the yellow in the lower reversal zone. Here, the yellow is not in the lower. Here, the yellow is not in the lower. It's not in the lower until right here. Okay. So this is our indicator suite to show you that, and we just developed a scanner to search through the universe of stocks and Forex and commodities, everything, anything, to show you this setup. And here we are. This was this is called the Breakout Force Scans. I took this 2 days ago, and you can take a screenshot of all these, of this if you'd like, and have a look at all these charts. This was taken on TradeStation, only for stocks, but I will show you Forex and CFDs shortly. So this tells us when we are ready and when the signal appears. So let's look at a few. So here is FANG Daily, and I'm only looking at the daily charts, but you can certainly look at a smaller time frame as well, because the markets are fractal and you can see this in any time frame. So when we see the gray arrow, this is a gray circle on this platform, this is our ready. And then the green arrow is our signal. So this is very cool. We have our purple arrow or a purple circle up here, yellow upper, yellow lower. Here's another example, JP Morgan. Yellow, that's where I worked, by the way. Purple upper, gray lower. Okay, lower reversal zone. Here's another example, PXD, purple upper, yellow upper, gray lower, triggers the trade. And Boeing, purple upper, gray lower. I took this trade actually. I did JP Morgan as well. Arrow up, and you can express your trade. We're not even going to get into how you can take your trade. You can take an option position, or you can trade by the underlying. It's really up to you. Okay. But the point is that this is really a great way to stop you from buying too soon. Yes, you could buy down here and you still make money, but this strategy is different. This strategy has you buying when we see the gray and when it's really playing itself out for a buy. Here's one more, same story. Notice the pattern. This is a beautiful, beautiful elite wave pattern where we have a long trend and then we have a nice corrective move down. So let's talk now about how to get in near the top when others are buying. We've already discussed how to get in when others are selling with this breakout 4 trade. The trend reversal is up here at point T. What happens at point T? Or what happens at point 0? They're both end of trend trades. We have a reversal candlestick pattern. We have divergence or a major peak. We have a trend line break, and we have the 1, 2, 3 reversal, either on the current time frame or on one time frame lower. So looking at this example, this is an hourly chart. We have a reversal candlestick pattern. We have a long tail. We have a major peak. We can't see the previous peak, but it's a major peak. We have a trend line break, and we have a 1, 2, 3 reversal right here. A 1, 2, 3 reversal is when price moves down from a high, price moves back up without taking out the previous high, then moves down and takes out this swing low. This is also a double top pattern. Very often you see classical technical analysis patterns in Elliott wave analysis. So this is where we would trigger the trade. We also learned that you would look for the purple arrow and the yellow in the upper reversal zone. So you get out of your long position here, and then look, we have our buy. We've saved a lot of heartache by keeping our long position up here, getting out and buying again at the right time. So this is the little strategy for the end of the trend. Here's another example on Facebook. We have a reversal candlestick pattern, we have divergence or a major peak, we have a trend line break, and we have the 1, 2, 3 reversal, which in this case happens before the trend line break. And then we have this long sideways correction, and then that brings us into the breakout one. So now we've discussed how to get out near the top, and this can be manual or it can be programmed. We have ours programmed, and then how to get in. We also have, I mean, these are just two setups, okay? With our system, there are other setups that you can do, like buying during a wave 3. That's another setup. So as long as you're trading the market map and understand what the next move is going to be, you can design your strategy around buying with the trend or counter trend trades. So what if you had another way to find the market top? What if you had automated trend line breaks and alerts and scanners? So this is what I'm going to show you. This is what our system does, and you can really program. You can get a lot of things programmed these days, and we have finally programmed our stuff that we've been using for a very long time, and I just love it. I'm just so happy that we finally programmed our stuff, because it saves a lot of time and effort from looking for the trades to set up manually. I'll show you. So this shows up automatically on the chart. So we have a yellow cell. I don't know if you can see this yellow trend line, and then this is where we've also programmed in the profit targets. This is the yellow arrow to the side. This is a red buy signal on this trend line break, and this is the profit target. This is the purple trend line break, and this is the profit target. This is a 15-minute chart on the S&P. This is a 15-minute chart on the Dow. We have a buy here, although this candle was pretty, you wouldn't have been able to get it. You would have had to just get in, like not at the candle close, get in. And this is the profit target. Here is another couple trades on the S&P. This was a couple days ago. We have two different sells, and then two different profit targets. It did go lower after that. So this is just a guide, and you can decide to hold the position or get out of the position. And then the market turned around. Here's another one, the NASDAQ. This is on the 1-minute chart. Getting in, and then here's one profit target, and then the second profit target. It hasn't printed yet, but it's up here. Here's the Russell on the 15-minute. Again, trend line breaks for sells, and then profit targets. So these are just ways that we automate our we've automated our trades. And this is the long bond in the US on the 15-minute chart, same story. But where do we see these trades? It's not like we have to keep all of these charts open. We've created a dashboard. And what is the accuracy of the signals? All the signals that have met their target have a dot next to the number. So what I've really tried to talk to you about today is the market map and the trading personalities and how you can, like I've shown you what the charts look like in an ideal situation. And when they look like that, you can find your trades. It's when the markets are, if you're looking at a certain time frame and it's just choppy sideways, you're not going to use this strategy. You're going to use something else. So I'm showing you trades for nice trends, but the trend lines actually work in choppy markets as well. So you can set up your scanner. This is an MT4 scanner. You can set up your scanner on any currency pairs that you want, any time frames. I just have the H4, the H1 time frames here, and I have the daily as well on the other page. And you can start with the 1 minute. I usually recommend looking at 3 time frames at a time. So if you're a day trader, you'd look at the 1 minute, the 5 minute, the 15 minute. Always start with your top-down approach though. Have a look at the daily, maybe the hourly. Just have a look at that as part of your routine before you start trading. This next shows you the commodities. All of these markets you can get on an MT4 platform. And through our funding program, even if you, no matter where you live, if you live in the US, Canada, Europe, Asia, it doesn't matter, you will be able to see all of these instruments on your platform. So these are commodities, and I have grouped them by symbol, and we have the weekly, the daily, the 4 hour, and the hour. And you can see the breakout 4 trades. If you want to see only the breakout 4 trades, you would click on the breakout 4. If you want to see only the breakout 1, you would click on the breakout 1s, and the top candidates would come to the top. These are different trend lines that we have going from higher time frame to lower time frame. Again, you would just click on them. These are the stock indices and the bonds, the US bonds. So stock indices, really you can get stock indices from any market. We even have, we have from all various global markets here. Same story. So these are all of the trades that we have programmed so far, and that's quite substantial. That's quite enough. So I just want to talk to you now about the Wavy Tunnel Pro, which starts August 8th. And I'm really, really, very excited about this program because for the first time, we're able to use Elliott Wave analysis and teach you the Wavy Tunnel Pro strategy in the program, and then give you a way to scan for your trades and to take the trades. Now, let me just tell you that everybody's personality is different, which means that some of you are going to be day traders, some of you are going to be swing traders, some of you are going to be position takers. How you trade the markets will be similar and different depending on if you're a day trader, a swing trader, or a position taker. If you're a momentum trader, you're definitely going to want to catch those momentum trades. You just want to get in like on those trend line breaks. And even if you don't have automated trend lines, get into the habit of putting them on your charts, even if you put them on manually. Ours are put on a little bit differently. I don't know if you noticed, but we had a lot of like dots and arrows. So they were drawn based on those dots and arrows in a very mathematical way. And all of those dots and arrows are Fibonacci related. So everybody's trading personality is different. Some of you that are just beginning might decide to start just with 1 or 2 markets to look at, especially if you're trading the currencies. So you might start with the euro or the pound. And then others that are more experienced, maybe you do want to look at a dashboard and be able to scan for your trades by looking at numerous markets in order to take a trade. Same goes with stocks. Maybe you're an investor and you just want to manage your portfolio, in which case you would want to really learn how to time the markets a little bit better. Okay? And then if you're a momentum trader on stocks, you want to get in, like I guess with short-term options if you see a move happening. So everybody is different, which is why in this program I like to meet one-on-one with our traders so we can really figure out what's best for them and which strategies are best for their trading personalities. So the Wavy Tunnel Pro 2021 is really a master training in understanding how the markets trade in cycles. Use our proprietary combination of cycle high and cycle low indicators with momentum indicators to warn of market tops and bottoms. Learn how to track short-term and long-term trends. It works with stocks, futures, ETFs, Forex, and cryptocurrencies. It works for day swing and position trading. Find precise entry points for option strategies. Embrace this suite of professional tools to trade like a pro. And the website is wavytunnelpro.com/funding program. That's the website. This is a 5-day accelerated trading and mentorship program. What you will experience is the videos are already there on the website. You get lifetime membership to the website, so you will always be able to go back and watch the videos, and there's a lot of training in there. So I have some students that go in and do the 5 days, and then they go back, and they even look at the original Wavy Tunnel Pro videos because we've updated them since. And the coaching is live coaching with me. And you don't need to come to all of the coaching sessions. They will be recorded. But on Sunday, we're going to have 4. On Monday, we're going to have 3. Tuesday, Wednesday, Thursday, we have probably 3. And those are private coaching sessions with just me and the group where we go over key materials, answer questions. Traders, we get a lot done in those sessions. And then I send you off to watch the next videos, and then we discuss after that. We also have a forum and a Discord channel. So it's very, very comprehensive. We've been doing this now during the entire pandemic, and the students absolutely love it, but some of the feedback is that we've covered too much material in the week, and I say, well, that's okay. I just want you to get a whole smattering first, and then you can go back and decide what you want to focus on, because again, not every personality is different, and something might resonate more with you, like a particular strategy, because we offer 6 strategies. And then we offer, like with this new scanner, we have the trend line breaks as well. The Wavy Tunnel Pro is a solid master's in trading education for all asset classes, instruments, and time frames. And this is how we break it down into the 4 sections. Section 1 is about Elliott waves, the market map, and Fibonacci. That's day 1. Section 2, which is days 2 and 3, it's all about the Wavy Tunnel Pro strategies. So we discuss 4 trend trades and 2 end of trend trades. What we talked about today, we talked about an end of trend trades. We call that the PWFG, price to wave, fill the gap. And we talked about the breakout 4. We also have the breakout 1, the breakout 2, and the breakout 3. Section 3 is all about trading, the Wavy Tunnel Pro trading desk and indicator suite with live trading. So this is where we actually show examples in the trading room, and we spend the day looking for trades and understanding, really trying to understand our trading personality and what we want to look for with the strategies. And day 5 is all about harmonics, which I like to say is the icing on the cake. So this is what you see when you go to wavytunnelpro.com/funding program. And I really want to talk to you about the funding, but the value that you're getting here is really huge. I ask the students in the past Do you get good value? Do you think the price is too expensive? Do you think it's not expensive enough? Most people say that they would pay more for what they're getting. So we've put the value at $6,495, and that includes you will also be getting a $25,000 funded account. And why don't we just talk about getting funded right now? If you want to be a professional trader without risking your own money to get there, with this opportunity, we are inviting you to be a trader, not just someone who trades. This is for you if you're ready to learn a system that will help you consistently profit and will help you create a healthy mindset for trading. So this is what you have to do. You have to qualify for the funding program. That's step one. And to qualify, you have to generate 10% profit. So on a $25,000 account, that's $2,500 with a daily loss limit of 2% and a max drawdown of 5%. Once you qualify, you get funded live, you share in 75% of the profits, you need a stop loss, and you have to flatten positions for the weekend. You can take positions overnight, just not over the weekend. You're allowed one withdrawal per month. And you can trade Forex, crypto, all CFDs, including stocks from this platform. Okay. Larger account sizes are available upon request up to $500,000. So back to the program, the price that we're offering today is $1,197 with the funding, with the $25,000 funding. We actually do offer a few different price points on the website, and so just check it out. Everything is there on the website, but it's a phenomenal value. You will walk away. If you have this training, you really won't need any other training. And we have support, we have mentors, we really want you to succeed. That's why we've added the funding program with it. So the accelerated training starts August 8th. You can email me at jody@fxtradersedge.com directly if you have any questions at all about the program or even about this presentation today, because I really want you to sense the urgency of understanding the market cycles and how they work. That's how I've been thinking for really 40 years. I've been really trading for 40 years, that's right. And I've never changed. Like when I look at a chart, I look at the market cycles. I look at that market map that I have taught you about today. So that concludes my presentation. And I want to thank you very much for being here. And make sure you email me, Jody with the Y at fxtradersedge.com directly if you have questions.
All right. Thanks again, Anna, for inviting me here to present today. Again, my name is Jason Love. We're going to go through an introduction here just really quickly, but the title of the presentation today is Market Maker Levels, the Secret Trading Levels of a Veteran Floor Trader. Now, I really don't like subject lines like that, or, you know, those kind of hooks that get people, you know, kind of involved in what you're doing. But literally, there's a reason why I call them the secret trading levels of a veteran floor trader. I had the good fortune of being mentored by a floor trader who traded on the floor for the S&P pits for north of 30 years. And he would, when we first started trading together, he wasn't really that, you know, helping me out that much with how the levels work. These levels I'm going to show you today, and kind of close to the vest. And then we developed a relationship. And as that relationship went on, became kind of this running joke that would be, where are the secret levels here today? Where are these mysterious levels? Where do they show up here today? And so it kind of became this running joke that we had together. Eventually, as he warmed up to me over the years and I warmed up to him, we developed this really good relationship. And so the levels that I'm going to show you here today, there is a reason why we call them the secret trading levels of a veteran floor trader. All right, so let's get through here. Let me, let's see. All right, here we go. All right, so again, quick introduction. Again, my name is Jason Love, and I'm the founder and lead trader here at Trade with OTG. That is a picture of me graduating from high school way back in 1987. Shortly thereafter, that's a picture of me graduating from Naval Boot Camp in 1988. And a few 30 years later, that's me as the founder and lead trader here at we used to be Oil Trading Group, and now we're Trade with OTG. Again, we were, when we started, just a quick story, when we started the Oil Trading Group, literally that's what we were trading. This was almost 11 years ago. It'll be 11 years in October that we've been running this education service and day trading chat room. We were the Oil Trading Group, and we focused primarily on oil, obviously, but as the years have gone on, we've incorporated NQ, ES, and also we do oil. So we have made a name switch here recently to Trade with OTG. All right, so the question everybody asks when they come to these types of presentations is, well, what he's going to show me today, does it actually work? And so what you see here on the left-hand side is a screenshot from Top Step Traders website. Again, they've subsequently changed, but this was on their website back several months ago. And they indicated that they had funded 1,020 traders in 2018, and 15 was the fastest days to become funded. Well, that 15 days was me. And if you take a look there to the right, we did a presentation called How I Passed the Top Step Trader $50,000 Trading Combine in 15 trading days. And again, we talked about the top 3 strategies that we use to achieve that funded account. Now, I've also gone through that Top Step Trader Trading Combine and others over the years, and this is not an all-encompassing list, but there are a few things that I want to show you on this list that pertain to the levels that I'm going to show you here today. And so if you go back into January of 2015 all the way up until July of 2019, which is where we ended this year, you're going to see a couple of things that stick out. One, you're going to see that we do have losing days, right? Also, the big number here I want you to look at is the average winning trade and the average losing trade. The average winning trade in our trade room is $421, and the average losing trade is $119. That's a 3.5 to 1 reward to risk ratio. The other thing I want you to notice is that the average win duration is about, let's call it 15 minutes, and the average loss duration is somewhere around the 5-minute mark. So that's about a 3 to 1 reward correction. That is a 3 to 1 win versus loss hold time. So in other words, we try to cut our losing trades short and let our winning trades run, and we hold on to our winners much longer than we do our losing trades. And the reason that we can do that is because of these levels here and the discussion that we're going to have on these levels here today. Now, I told you that that was not an all-encompassing list, and back in October of 2020, we went through, and we do this occasionally, we go through a trading combine inside of our trade room because we have a number of traders that want to become funded traders through one of the prop firms that are out there. And so what you're looking at here is an actual letter from Top Step Trader to me, congratulating me on passing the trading combine, right? So if you look here, this is October of 2020, and this was us passing into that trading combine. Now, October of 2020, we took the 50K step 2 to the funded account, and this is the results of that, right? So our P&L high was 3185, right? Our average winning day 493, average losing day 380, and we had a check mark next to all of your green little criteria. We did this in 10 trading days, right? So we went from step 2 to funded account in the minimum amount of time, which is 10 days, with an 80% win rate. Now, I'm not going to go through all the details of their funding program, but Top Step Trader gives you a choice. You can either go with the pro account, which leaves you in a simulated environment. You get your account set up pretty quickly, very quickly, and you can continue to trade. Now, there's a real advantage to doing it this way for them and for you. The advantage to you is that you get to stay in the simulated environment while you earn real money. If you look at this red box down below, once you make $5,000, once your account reaches $5,000, then they will do one of two things. You could take 100% of that right then, or the second thing you could do is move that over into what they call their premium funded account, right? So you can do one or the other. Or you can go straight from that passing step 2 into the premium funded account. However, when I talk to traders about the process they should go through, I always recommend that they go into that pro account versus directly into that funded account. It's just a little bit less pressure. It's simulated profits. So if you get simulated fills, then those simulated fills go towards real profit numbers for you at the end of the day. And there's just a ton of advantages to going that direction. All right, so we went from the 50K pro account to a premium funded account in literally 4 days, right? You had to hit a $5,000 profit objective, and we actually did that in 4 trading days, right? So from November 2nd to November 5th, we did that in 4 days with a 75% winning days. In other words, we had 3 winning days and 1 losing day. And our worst day here, that worst losing day was $923. Now, this is the letter that they send to you when you reach that premium funded account. Congratulations, you earned a premium funded account. We're thrilled that you have reached this significant milestone. And then they set up for you, they take that $5,000 and set it up into a real live money account, and you have a real funded account at that point. All right. In addition to that, and again, the premise here is I want to show you that what I'm going to show you today actually works from a trading perspective. And that old adage of cut the losing trade short, let the winning trades run, and you want to have a reward to risk ratio of 2 or greater, right? 2 to 1 or greater. Making for every dollar you put at risk, you want to make at least $2. So we did a step 150K step 1. Again, the minimum number of days to complete, which you see down here, was 5. We did this in 5. There was a profit objective here reached of $13,274 to get through step 1. Now, we also took that same account from step 2 to funded account with a profit achieved of $12,359 over the course of 10 trading days. And you can, again, you'll see that we have losing days, right? We had a losing day here of $2,000 in that process of going through it. So there are losing days, but when your winners way outpace your losers in terms of reward to risk ratio, you can afford to have some losing trades and some losing days, but you are breaking that curve that a lot of traders go through. Small win, small win, small win, one oh crap day that takes out all of your winning days and then some, right? You want to switch that paradigm. Losing day, losing day, losing day, small losing days, and then have that big winning day that outstrips all of your losing days. All right, so what I just showed you here in terms of profit in 2 Top Step Trader accounts, one the 50K account and the 150K account, we grew those accounts and passed those trading combines with $36,902 in one single calendar month. Now, Top Step Trader is not the only one that we go through, and I'll tell you about that here in just a minute, but we had a guest in our room around that same time. Stephen G was a guest. And during his free trial, he said, by the way, he became a member. He said, by the way, he sent me this email. I passed the first step on phase 1 with Top Step with your trading methodology during my free trial over the past 4 days. If that wasn't worth every penny, I don't know what is, right? And so here is the evidence of his trading combine that he went through, passing step 1 while he was in, didn't even really understand the system or the methodology. He was there on a free trial and was just kind of shadowing along with us and passed his Top Step Trader Step 1 trading combine during his free trial with us. All right, like I said, it's not just Top Step Trader that we've gone through. We've also gone through the Earn to Trade gauntlet, right? And so we passed through their criteria and their process, and they deposited $5,000 into my trading account, or into my personal bank account rather, from Earn to Trade. So we actually did a webinar where we said we went from 0 to a $5,000 deposit into our account. And I'm going to zoom in on this here so you can see. And so you'll see here, this was Earn to Trade, right? Fund transfer $5,000 here into my Chase for Business checking account. So again, not only did we go through the Top Step Trader and pass, we've also done this using these levels with the Earn to Trade. Now, I don't want to just cherry pick a few of these things for you. I want to show you that we have a YouTube channel where we have gone through and recorded videos. There's literally about 500 of these videos out there. And so give me 1 second here. I'm going to throw the link into the YouTube channel here so you can see it. And let me just throw this into the main chat window here. There is a link to, should be a link here. Hang on a second. All right, there is a link here to the YouTube channel, I believe. Did I get that in there properly? Give me 1 second here, guys. And I'll make sure that we get this in here. Entire audience, there we go. All right, there is in the main chat window, there is the YouTube channel, right? And this is what it looks like. And this is literally hundreds and hundreds and hundreds of videos showing us going through and doing the levels that we use. These are trades that are taken in the live day trading chat room. And it's been a busy summer here, and we've gone through some changes and updates and upgrades and things like that. But in preparation for this presentation here today, I recorded 3 videos here on each one of these days. Here's a 40-point times 2 lot NQ move. Here's a $3,100 NQ trade. This was done on, let's see, today's the 5th. This was done on Tuesday. And then this was yesterday. We had a $1,000 each ES trade and an $850 NQ trade, where I go through and show you exactly how it is that we went through, what we did, and I go through and show you the trade as it actually occurred. Let me find it here, right? As it actually occurred in the day trading chat room. So again, this is the trade as it was occurring in real time in the day trading chat room. So you'll get to watch that. You'll get to see the levels in action. You'll get to hear me talk about those particular trades. And again, there is the link there to the YouTube channel for you to review. And if you are interested, I don't know if you can see this in the top right-hand corner today. We had 2 trades in the trade room, and I'll be putting out a video here today. We were up on the NQ today, $1,380 on a 2 lot, and I'm going to go through a couple of those here in just a moment. So there's your YouTube channel. And again, this whole point of this was to show you that what we actually do does work, and I put it into practice every single day in our day trading chat room. And we'll talk about those levels here in just a minute. Before we get started, of course, your Uncle Sam wants you to know that they're trading options and futures has large potential rewards, but also has large potential risk. And you must be aware of the risk and be willing to accept them in order to invest in the futures markets. You should seek appropriate advice from your broker or licensed investment advisor before taking any action. Trade with OTG does not hold itself out as a commodity trading advisor. And so given this representation, all of the information and material provided by us to you here today is for educational purposes and should not be considered specific investment advice. And of course, hypothetical or simulated performance results have certain limitations. Unlike actual performance records, simulated results do not represent actual trading. And you can get the entirety of that disclaimer by heading to the website and looking at the legal disclaimers. All right, so let's talk about the levels here. First of all, what is a market maker, right? Every instrument needs a market of buyers and sellers in order to move the exchanges. When they were on the floor, market makers were high volume traders that literally made a market by always standing at the ready to buy and sell. If they did not fulfill that purpose, the bid-ask spreads would be extremely high. Their job was to profit and provide liquidity on the bid-ask spread by providing that additional liquidity. Now, this picture of this flamboyant guy to the left here was Patrick. This is an actual photo of him on the floor of the exchange, and he is the creator of these levels that I'm going to show you here today. Now, remember, a floor trader was an exchange member who executed transactions from the floor of the exchange. Again, floor traders were also referred to as market makers. So these levels were actually developed in the 80s, and they were written by hand on paper initially, right? And so in their original form, again, the levels were calculated by hand. And despite the changes in the way trading is conducted today, the logic for the levels continue to work in today's trading environment. So what are the market maker levels? Well, the market is continuously telling a story. And when you become a member, if you become a member of our group, we kind of start at the top and work our way down. We say that the market is always telling us a story. It is our job to find out what the story is and to interpret that story. The market maker levels are the structure points inside of the daily story. So if you start from the big picture perspective with the profile as an example, what is the story the market's trying to tell you? And then when you get into the story, then you have structure within that daily story that helps you make decision points, if you will, on your charts. Once determined, these structure points are used as tactical areas to make trading decisions, entries, stops, exits, and target locations. So why do these levels work? I get that asked all of the time, right? Why do these levels work? Well, they work because, as you know, the market does not move linearly in nature. The market will rally, it will pull back, it will pull back, it will rally. It is inside of these rotations that measurements are created that then form the market maker levels. Now, statistics will show you that the market will be non-trending greater than 80% of the time. And here's an example. Market pulls back, and then it rallies, and then it pulls back, and then it rallies, and then it pulls back, and then it rallies, and then it pulls back, and then it rallies, right? And so these rotations in the market create a set of measurements that are then used to create these levels. Now, here's again why they work. In order to fully understand why the market rotates, you must understand the auction process and how markets go about discovering what the fair prices are in any given day. And, you know, you see these market forces playing out in all sorts of things, right? Like right now, it's used cars. There's a chip that is there's a chip shortage in new cars, and so used cars have become more valuable. As these used cars have become more valuable, their prices have risen, and so they are breaking past old highs for makes and models of these different cars, right? There has been a dynamic shift in the market that has caused prices to increase, right? That same thing happens in trading, that happens in real estate, right? It just happens across the board. Toilet paper during COVID, right? There was the price of toilet paper that became much higher than it is today because of the scarcity and the demand that had increased, right? And so again, the market is continuously rotating to find buyers and sellers, right? The market rallies to find sellers, the market sells to find buyers. So remember this, the market again moves from horizontal development to vertical development to horizontal development, and that process just repeats itself over and over and over again. So again, the sole purpose of the market is price discovery. The market will rotate within a range of prices until a variable changes, like the car that we just talked about, right? And that happens all of the time. And once that variable changes, then you get a breakout, right? You get a rally, you get a sell-off, you get a trend, and then the market will find sellers or buyers at the end of that trend, and then the market will begin to rotate sideways, and then a lot of times it will begin the process of rolling over or breaking back out again. Again, these rotations create a set of measurements that are based upon time and price cycles from previous trading sessions. So again, it's using market-generated information from the recent cycles of the market, right? And so if you think about the cycles in the market, that's valuable information. Those sets of measurements that are created by those real-time cycles provide you with excellent support and resistance locations. Again, these measurements are then projected forward and become the structure points for the day's trading session. Here's an example of what this looks like on Sierra charts, right? And so you see that you had an upper level here, and like stairs on a ladder, the market just comes down to the level, rallies, sells off to the next level, rallies, rotates around the level, sells down to the next one, rallies, right? And this process just repeats itself. And I'm going to show you in some real-time charts today exactly how this works. Now, I get asked this question a lot. Jason, are these floor pivots? Like, are they the standard pivot point and the R1 and the S1 and the R2 and the S2? Are they some version of Camarillo pivots? And it's true that these were developed by a floor trader. These are not floor trader pivots. The calculations for floor trader pivots are based upon basically a very simple formula: the high, the low, and the close, right? So the pivot point is that kind of center line in a floor trader pivot is the high plus the low plus the close divided by 3. That gives you kind of that pivot point. The R1 and the R2 and the R3 are variations of that same measurement. Now, these measurements are basic in nature and do not take into consideration changes in market and price volatility or range expansion as it's occurring in real time. The market maker level calculations are based upon measurements which derive from both time and price movement. And because of the time calculations involved, these levels evolve in real time to account for the changes in rotations and price discovery. There are three measurements: ETH, extended trading hours, RTH, regular trading hours, and intraday trading sessions. All right, so some final thoughts here before we get going. These levels continue to work and will continue to work despite the changes in the way that people trade, right? So when you were a floor trader, you had a lot of verbal and visual cues in the market. When you pulled those guys out and put them in front of the machine, their jobs became much more difficult because they did not have all of that visual and audio stimulation that they were accustomed to. But again, these levels and these measurements work because trading is based upon human emotion and group think. The levels take advantage of the process of continuous price discovery and provide structure for the daily trading session. So we're going to talk about some chart examples. I'm going to show you both the ETH, extended trading hours, or overnight trading levels. And then I'm going to talk to you about the RTH session, or the regular trading hours levels, right? So again, the ETH session levels begin plotting at the close of the RTH session and are valid until the close of the next day's RTH session and provide structure points or support and resistance for the overnight. The regular trading hour levels begin plotting at the open of the RTH, or the what used to be PID open session, and conclude at the close of the RTH session. And these are the primary levels used during the RTH session. So the one thing that we all want to do is we want to take a look at some chart examples here. So let me escape here, pull this out of the way, and we'll start looking here. So again, I don't know if you can see this or not. The font here is a little bit small, but we were very nice day. We're going to be putting and posting. I'll post this video on the YouTube channel here today. Again, we are a 2-lot trading group. At least that's what I do. I trade 2 lots on the NQ. And again, we were up nearly just over $1,350 today in our live day trading chat room. And so we're going to start by looking at the NQ here today. All right, so I'm going to turn off the RTH session levels. And if you look here, this is the PID open, right? So here's where the levels are. Or so this is where the levels would form up in the RTH session. But we're going to start by looking at the overnight structure points. All right, so the market opens up, comes into the level here, what we call the ETH signal, and then makes a new low. Couldn't get to the level below, so our anticipation is that we're going to continue the rally. Market comes down, rallies into the level above, and then rotates, could not make a new low, breaks out over the top, comes back, tests that level, rallies, tests it into the overnight session, and then you get your RTH session levels that open up. And here it is. You have what we call that opening head fake on the NQ. The market shoots straight down into the RTH signal where it stops, and then it rallies, right, all the way up into this RTH upper target. And it is in this area where we had our trades today, right? So I'm going to show you some reward to risk ratio type ideas here, okay? I don't recommend what I'm going to show you doing all of the time, but for the sake of this discussion, I'm just going to show you an example. All right, so let's say you are trading a 1 lot here on the NQ. We'll just do that for ease of math. And the market, you sit down and the market opens up and you decided you were going to get long here at 1593 quarter. And you take a 10-point stop right here, okay? So you put your stop there at 10 points. Now I use 10 points for a reason. And you said, okay, bummer, that stopped me out, but I'm going to get long at the level below, right? I'm just going to take this level below, which is, by the way, which is what we did today. I took this level here, and the market gets in, and at 73.75, okay? Market rallies, 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 and let's say you just wanted to take it right here at this next level. That's 39.25 NQ points, right? So you took a 10-point stop, and you had a 39.25 point target that worked perfectly, right? So that's almost a 4-to-1 reward to risk ratio. Remember what I was telling you earlier? Cut the losing trades short, let the winning trades run, and that's what happened here today. right? There's a 4-to-1 reward to risk ratio. So you lost 10 points and you gained 39.25 points, something like that. And again, I'm just showing you, right? This is something that I did myself here today. Here's the NQ. This is today's P&L, right? That's something that I did myself. And I have the YouTube channel where I show you all week how we have done these very similar type ideas. And so again, look what happens here. Market rallies, pulls back into your level, and then rallies again into that level here. Then when does it pull back? It pulls back into this level, a little slippage past that level, but you'll notice it never closed beyond that level. And then what does it do? Rallies to the level above and then to the level above. And that is all of the day levels. Now, what you would do then is you would turn on your overnight structure points and you begin to get a little cleaner picture. Never closed below the ETH signal, rallied into the ETH target, couldn't get to the level above, so your expectation is it comes to this level here. And so if I were just sitting down right now, I would be looking at this right here as a bull flag, right? I'd be looking at that as a bull flag kind of idea. And so we are finding support here at this RTH target. I would be then looking for a break of this level here to take us up into this level there, right? So that's what I would be looking for as another opportunity. So let's bring this up here. And you would say that that is 32.25 points, and that would be 54 to 42. So you would be looking just below that level here at about 40.75. So about 13-point stop and a 32.5 point or 33-point target. So just a bit better than 2-to-1 reward to risk ratio. And remember what I showed you in those things earlier, the reward to risk ratio is a key component to what we do. And this is how we do it on a day in and day out basis. So I'm going to go back. We're just going to keep looking at charts here. I'm just going to go back on the NQ and we're going to turn on the structure points from the prior day. Market opens up. Where does it stop? RTH signal, right? Comes all the way down through the signal. And where does the market stop? At the RTH target down below. This was an extremely choppy day yesterday, right? Look at all this chop. But what is happening? RTH signal, RTH target, right? And that is that move here. Let's say you got stopped out a couple of times, but you took this trade. That's 70 NQ points. Well, how many times can you be wrong with a 70-point winner times one lot, times two lots? How many times can you be wrong and still be okay, right? I would argue that if you had a 10-point stop, you could be wrong 7 times and still be okay, right? Paul Tudor Jones says he can be a complete imbecile and only win 20% of the time, but because of his 5-to-1 reward to risk ratio, he's okay. And I would argue the same thing here. Market gets in. What does it do? Rallies all the way back up to the RTH signal and then pauses before it continues. Comes all the way down into the RTH mid and then all the way up to that target up above, right? Like steps on a ladder, it continues to push. And so again, a way to look at this would be right here, right? You had a little trend line idea, right? You had a bit of a triangle here. You broke through the level here and then you rallied, right? So what is that? You break out here, make a new high. You can wait for the pullback into here, or you could take the breakout. If you waited for the pullback here, then the market continues to push all the way up into new highs and through that target. So again, very, very clean type levels and very clean in the way the market works. We're going to go back one more day and then we'll look at a couple of additional instruments here. All right, so let's take a look here on this particular day. It was a very big moving day. Market opens up, does not close below the RTH mid-session level here. So your expectation is that it's going to rally to the level above, which where does it stop? It stops right here at the RTH target. And again, I'm going to recommend, I don't recommend that you do this, but let's say you got chopped up here, right? Well, the opportunity here to come all the way down to this level here was 104 points. How many times can you be wrong at 10 points a pop and still be okay? Well, in this case, you could have been wrong 10 times. 10 times 10 is 100, right? So even if you took these areas here and you got bounced around here, this level here, right? And this is applying no filters. This is just taking the levels as they happen, right? And you had an opportunity to come all the way down to 104. And before you say to me, well, Jason, you're just cherry picking, I'm actually not, right? We're just going through the charts here. And I have a YouTube channel. I'm going to go through this again, where there are literally hundreds and hundreds of videos of me doing this exact same thing with these exact levels on a day in and day out basis, right? Some of these go back 4 years, right? But let's just talk about the ones that are just this week. In preparation for my presentation here today, I made 3 videos this week showing this exact thing on the YouTube channel. All right, so that's what the NQ looks like. Let's take a look here at the, we'll take a look here at the ES, and this is what the ES looks like here today. So right now, we opened up the structure points for the overnight levels, right? So the market opens up, comes into this overnight structure point, couldn't get up through the level above, rotates back, and really just spends a lot of time rotational around this level until boom, sell off right into the level down below, and then the market has subsequently rallied, right? And so again, right down here, and we have what we call zones of influence. In fact, let me turn those on here. So one of the things that we do here when in the training is we do what we call turn on what we call our zone of influence. So as you know, support and resistance is less about to the tick precision and more about kind of zones of influence around a level. And that's what these look like here, right? These are the zones of influence around that level. So when you turn these on, you kind of see, right? So the market comes right down into this level in that zone of influence, right? And rallies all the way up into the ETH signal today, which this one stopped to the tick here, right? Right after the pit opened, stopped to the tick before you got a pullback. Now, let's take a look at the RTH session levels. And if I were to turn on those zones of influence here on the RTH session levels, let's do that. You'll notice that at the open here today, you came right down into that zone of influence, just a little bit ahead, right, of it. And then, boom, rallied all the way up into the RTH target where the market has begun to rotate. You'll notice here, comes back, tests the level to the tick, rallies into the target, triple tops the high, which is your clue that this thing is about to roll over, which is exactly what it did here as you come right back down into that level there as well. So let's go back a day. This was a very choppy day yesterday, but again, the level's giving you excellent information. So again, look at all this chop. Never closed below the level here, which is the RTH signal, right? Never closed below that level, kept tagging, rally, tagging, then goes up to the level above. Couldn't get to the level above here, so your expectation is it's going to drop here. Market does, comes all the way down, pulls back up here, and ultimately comes down to the RTH target. So you had signal to target, and then the market rallies. Where does it rally to? Rotates here around this level, comes back, pulls back, and then stops at your level above, and off it goes, right? And so we'll go back one more day on this really trending day here. And again, same kind of idea. Market opens up. Looks like it's going to be a big selling day until you find support down below you here where you rotate, and then the market climbs the ladder the entire day. And look how it just adheres to these levels all the way up on your charts here, right? So again, very, very clean looking charts, and we'll turn off the over the day structure points and you can see how they performed, how the overnight levels performed, right? And so again, just very clean on these charts, right? Just very clean how these levels give you excellent information. All right, we're gonna take a look here one time at the CL. Here's what it looks like on the CL today. Market rotates around the mid. Let's say you try to get long here and you took a stop and then you decided to get long here and you had the opportunity to go from this level to almost to the tick up here to the target. That's 107 CL points, ticks rather, 107 CL ticks. How many times can you be wrong if you have an opportunity for 107 ticks and still be okay, right? That's always the question that I ask is how many times can I be wrong, right? Maybe you took it from here to here and you waited for the pullback to here, right? You had a couple of opportunities here to do things, right? And so there was really good opportunities there with your levels here on the CL. Let's take a look here. This was yesterday's pretty sizable moving day, right? So the market breaks down through, comes down to the target. This is a little bit of a challenge. This is a day where I might have looked here at the ETH session levels. So that is the overnight structure points. And let's take a look here. So you had your overnight structure points, market opens up, rotates around, and really the big selling point, this is at around, interesting here. Okay, so I have what I call the London range open, okay? And you'll find this fascinating. This is not a point here that I intended to make, but I'll do it. So Central Time, I consider the London opening range from 1 a.m. to 4 a.m., okay? Which is right here. And a high percentage of the time on the CL, this is the CL only, by the way, a high percentage of time on the CL, the high or the low of the entire session for the CL will be made inside of this window, right? And so when you see this kind of thing happen, this is an excellent opportunity. So if you're overseas and you're up around this time trading, this is an excellent opportunity to take advantage of what ended up being a massive sell-off here on this particular day. Now that I've shown you this, I should probably go back and let's do this, copy and paste. This is not what I intended to show you here, but we're doing it now. So let's see. So we'll go back from 1 to 4 here, and I'll show you this one more time. So from 1 a.m. to 4 p.m., look, right on the cusp. So that's close enough, right? Boom, flush, right? Right at the cusp of that 4 a.m. window, flush. Anyway, that's just sort of interesting there for you to look at. So as I look here, let's go through just one more time. Let's go through a couple more of these as we go through it here. Let's turn on the day structure points and we'll take a peek here. So this big flush day, market comes down, you open up right underneath here, right? So this would have given you an opportunity to get in and get safe. Market rallies and pulls back. Let's say you took a stop here, but then it rallies and pulls back right to that level. So I take 10 tick stops, 11 tick stops on the CO personally. So let's say you went here, it didn't come down to the level below, so you stop out at break even. Rallies, you're trying to get short, it rallies and takes you out up here. So you take an 11 tick stop. Then you try to get long and you take an 11 tick stop here. Then it pulls back and rallies into the level. So you're down 22 ticks. And you ride that to the level above, that's 100 ticks. Down 22, up 100, we'll call it 102 for easy math, that's 80 ticks, right? Just trading off of the levels using nothing else. And these levels work that well, right? All right, so let me take a look here at a few questions that are coming through. What was the start amount before it reached the initial 5,000? It's at zero there, trader. The initial start amount was zero. So when you start into that trading combine and you go through, he's referring back to the question on the funded account stuff, that you start at zero. So you go from 0 to 5,000 in that amount of time. So that is a pretty cool thing. All right. So anyway, I showed you all of that earlier, by the way, and look what's going on here now on the CL. Rallied into this level, sold off, and you had a little bit of play here, but now you're moving through it here, right? So now you're moving through. And so if you wanted to do, you can do, let's see here, we'll do a little channel action here. And again, we do all of this every single day in our live day trading chat room. Literally, I'm on screen and live every single day. All right, so you got a little trend channel going on here, right? It's just following this up, and your target objective would be up there at 69.34, which is just beyond the high. And if you break out of that, you're looking for this level above. But these are excellent reward to risk ratio type trades, right? Okay, so I got about 5 minutes left here. Here's what I'm going to invite you to do. I'm not going to sell you anything today. I'm just going to invite you to come in and take a free trial. All right, so come in, sit in our chat room. You can start tomorrow if you'd like, or you can come in next week. I'm going to put the link to the free trial here. All right, and you come in and see the levels in action, watch us trade them. Get on our mailing list. You're going to see the video come out today here where I'm going to show you the trades that we took to get to 1360 today on 2 lots on the NQ, and you'll be able to see that. So before I turn this back over to Anna here, Are there any additional questions that you guys have on the levels or the things that you've seen here so far? Okay, that's a good question. The question is, does this work on Forex? Well, they were specifically designed for futures markets or markets that have a specific open and close. However, not only do I give you an indicator, I teach you how to draw these, right? And I meant to tell you that earlier. I'm going to teach you how to draw them. So you're going to understand how they're created, why they're created. And then once I teach you how to draw them, you can then apply them to other markets. You may have to do a little, they weren't specifically designed for Forex, but you could, once you learn how to draw them, you'll be able to see the trends and patterns on the Forex market. So hopefully that makes sense. Cool. Thanks, Dockin. I can't place trades with zero. What was the initial amount of the trade before it reached 5,000? Yeah, you can at Top Step Trader. They give you a margin account, right? It's on their, it's a sub account at Top Step Trader. Yes, you can't go tomorrow and have a $0 account. But when you are going with the prop firm, your sub account allows you to have buying power so that you can get into opportunities. Hopefully that makes sense. I don't know if I explained that well enough, but that's something that you can do. So what I would recommend, come in, watch us trade them. Tomorrow's Friday. Come in tomorrow, come in early next week, and all of that kind of stuff. And we'd love to see you in there. And Dave is the guy that is kind of the guest, the greeter, if you will. Make sure you tell him that you were here from the Investor Expo webinar today or tomorrow or whenever you come in. Make sure you tell Dave, and we'll make sure to give you a special shout out in the room, and come trade with us for a couple of days. It depends on the size, trader, it depends on the size of the trading combine or whatever that performance criteria that you went through or you selected. So for example, you could be on a $50,000 account, you could trade as many as 5 lots. Now, depends on what stage of that process you're in. If you're in the first step, then you could trade 5 lots at one shot. If you're in the 150K, you could trade up to 13 lots in one shot. If you're in one of the later stages where they are really grooming you to become a more experienced trader as you go through that process, then they scale you in based upon your current profit levels. So anyway, that's a whole other, as Jerry Springer would say, that's a whole topic for another show, but we can come back. Make sure you ask those questions. Come in and ask those questions tomorrow with us here. Make sure you ask those questions. I can go through in a lot more detail as I have about a minute left here. Jihad, we don't have an indicator for TradeStation, but once I teach you how to draw them, it literally takes you about 30 seconds to a minute to put them on your charts on a day in and day out basis. Once I show you the process, that's why I teach you to draw them. One is that not everybody's we don't have it developed across a lot of different platforms, but I also want you to understand why it is that they work and how they are derived, right? So that you can learn how to trade them and learn to understand them. So that it's kind of like, and I got 30 seconds here, but it's a little bit like your math teacher, right? Before they handed you the calculator, they taught you how to do it. They handed you a pen and paper or pencil and paper and said, this is how you do it. And then once you learned how to do it, they gave you the calculator to make it easy. So again, it's kind of that same thing here. So make sure you sign up for the free trial. Love to see you in there this week and tomorrow and starting into next week. You guys have an awesome rest of your day.
All right, folks, good afternoon, good evening, good morning. Depends on where you're joining us. Anna's in Ukraine. I'm down here in God's waiting room, Boca Raton, Florida. Welcome aboard my presentation. It's a brief. It's not called a long, right? This is a brief, and my brief is entitled Trading the Death Star. There's only one stock, one you need to trade for the rest of your life. If you're sitting there going, what the hell is the Death Star? Well, clearly, well, you're not my age, or you don't have Star Wars nerds like my 3 kids. But the Death Star was that huge kind of planet-sized battle station that the evil, Darth Vader and his forces utilized. Got half blown up, but they rebuilt it and essentially was taking over the universe. That's exactly what this stock is doing. And some might say it's almost as evil as Death Star itself. So let's go ahead and get airborne. Real quick, in my personal account, some long Amazon, some XLY, Cybin, which is a great pharmaceutical play, MindMed, and I think that's about it. All right, quick question. I run Top Gun Options, former Navy fighter pilot, so we're going to have an aviation theme to my presentation because trading's a form of combat, right? Somebody's going to win and somebody's not. And why wouldn't you want to use the same methodologies that kept me safe over the skies of Iraq? So let's kind of kick off with a quiz, or actually, no, your opinion. Which fighter aircraft would you rather fly? I'm going to give you two choices. There's your first choice. Oops, hold on a second. There we go. Sorry about that. There was my personal disclosures. There you go. There's the Death Star. There's my personal disclosures. My screen was frozen there. Okay, so which fighter aircraft would you fly? This is your first choice right here. Ladies and gentlemen, this is the F-4 Phantom. Okay, take a look at that. That actually, staring at this picture gives me agita. There's over 300 switches and dials in that cockpit. The pilot would spend a lot of what we call heads down time looking at all these steam gauges instead of eyeballs out of the cockpit, looking for enemy aircraft, those MiGs, or surface-to-air missiles that we call SAMs, or AAA, anti-aircraft artillery. I mean, folks, this jet was so labor-intensive that they actually threw a dude in the back seat just to run the radar. Very, very labor-intensive aircraft. Okay, would you rather fly this jet or that one? 2 flat panel displays in this aircraft. Folks, this is the F-35. This is the Joint Strike Fighter, the Lightning II. Folks, this thing is insane. We call it the Wonder Woman jet. It's invisible to radar, and the jet is smart enough to actually limit the amount of information that it displays to the pilot at any given portion of the flight. And you want to be creeped out even more? This jet is learning. The AI on board is learning what the pilots are doing and getting smarter. A little creepy there. I mean, so 2 flat panel displays. This thing, check this out. Speaking of Darth Vader, look at the damn helmet, folks. That is a $500,000 helmet. We also call it the Wonder Woman jet because when you look down in the cockpit, you don't see the cockpit. You go through the floor and you see the ground. You see surface to air threats. You see MiGs. Everything is displayed on the pilot's visor. Absolute insanity. So I guess it was a tongue-in-cheek kind of question. Which aircraft would you rather fly? But clearly in today's environment, you want to fly the F-35. And I'm going to tie this all together, I promise. So I'm going to give you a quick intelligence brief. I'm going to show you the only stock that you need to know own. And I know hundreds of you just kind of turned your head 90 degrees like the RCA dog and went, what? One stock? Yeah. Or a good substitute to trade, since it's probably not the cheapest stock. But I have a great substitute that I'm going to show you that we trade. Turn off your electronic nicotine, no distractions, because you've never heard what I'm about to tell you. As a matter of fact, you've heard for your entire investing career, you've heard the exact opposite of what I'm going to tell you. Ladies and gentlemen, real quick, as Anna said, my name's Matthew Buckley. My call sign is Wiz. I flew the FA-18 Hornet for the United States Navy for about 15 years, graduated from the Navy Fighter Weapons School, which many of you know as Top Gun, and I also flew some combat sorties over Iraq. I was also an adversary pilot. I was a good bad guy, right? I was a really good guy, good enough that they picked me to be a bad guy. So I would study enemy tactics and threats and missiles and aircraft and mindset, and then I'd jump in my jet and go pretend to be a bad guy, getting all our good guys and gals ready to go overseas. So I had an absolute blast. What's this have to do with trading? Everything. As a young now I'm going to really date myself. As a young officer graduating from college and getting commissioned in the Navy, waiting to go to flight school, I'll never forget my first duty station, Naval Air Station, Key West, Florida. I wrote a check for $25, which was a lot of money for me at the time, to the USAA Aggressive Growth Mutual Fund, right? I'm like, didn't join the Navy to get rich, right? You join the Navy to serve your country and to be a great American. But I was always interested in finance, and hey, let me start saving for retirement now or trading. Well, the woman I was dating at the time more or less kept Ann Taylor in business, and I was paying the American Express bill. So I'm like, why am I paying a mutual fund manager to pick a basket of stocks when I can do it? So short story long, that's what I did. And as I started learning to be a Navy fighter pilot, I started applying that to my trading with incredible results, having a strategy, implementing tactics, contingency planning, right? Knowing when to get out of a good or bad situation before it gets even worse, right? Taking the emotion out of the trading and following a checklist. And it worked with incredible results, folks. I popped up on the radar of one of the largest volatility arbitrage firms in the country, headquartered right here. Everybody should know what that building is. That's the Chicago Board of Trade, the intersection of Jackson and LaSalle, baby. I had an absolute blast when I was in Chicago. I helped build a hedge fund. I helped build the retail brokerage firm that was called Options House. Hell, I even built my own company when I was up there. I built a company called the Options News Network, right? ONN.TV. We were essentially the CNBC of options, right? I know John and Pete from my time in Chicago, John and Pete Nigerian. But, you know, bless their heart, CNBC gives them, okay, we spent an entire 59 minutes on stocks. John and Pete, what do you have for options? Okay, thanks, let's go to break. So we focused on options. We shot on the floor of the CBOE and the CBOT, and I gave you a behind-the-scenes look at what was actually going on in the options market. Had an absolute blast. And I jokingly tell people that, you know, I was essentially, I'm Eddie Murphy, right? I'm Eddie Murphy from Trading Places, little old retail trader that was doing pretty damn good and got called up to the big leagues and to hang out with the smart money. As I said, I live down here in South Florida. I do some charitable work for the Broward Sheriff's Advisory Council. I lost a sister to a drunk driver, so I'm a big advocate and support MAD. And then last year, I started my own foundation called the Top Gun Fighter Foundation. I've lost 3 of my best friends to suicide. 1 veteran per hour kills himself. During the time I'm going to talk to you today, a veteran will take their own life. It's a disgrace. It's a national tragedy, and most people, when I tell them that metric, they're stunned, and it's heartbreaking. So I'm going to try and fix that. Very old picture. This is actually when we left Chicago. That's my beautiful bride, Susie. My oldest son, Matthew, is 21 years old. He goes to Norwich University in Vermont. He's in the Corps of Cadets, and I guess I dropped him on his head when he was a kid. He wants to fly for the Marine Corps. My middle son, Jack, is a junior in high school. He wants to go to Notre Dame, and he wants to fly for the Navy. So we're going to have a little Navy and Marine Corps rivalry here. My daughter, Keely Grace Buckley, is 13, going on 30, and she's not allowed to leave the house. So that's a little bit about me. All right, let's go ahead and get airborne. Here we go. You're never going to believe what I'm going to share with you, right? Or actually, you will. It's always funny. I always kind of question myself when I give this brief. I'm like, is this going to be shocking or not? We'll see. Wall Street is lying to you. Well, the half of you are probably like, well, Wiz, thanks for the intel brief. And the other half of you are probably like, about what? Well, about a lot of things, but how about this? This was the biggest lie you've been told since day one of investing, isn't it? Show of hands, how many of you have heard you can't put all your eggs in one basket? You don't even have to raise your hand what people are, but hey, I've heard this. Day one of investing. Oh, you have to diversify. Diversification is important. The 5 tips to diversify. Diversify, diversify, diversify. If you took a shot every time you heard the word diversify, you'd probably be dead, right? So I'm a fighter pilot. I'm an options trader. Some people might say blunt. I just don't have time. I have no filter, right? I mean, when you're flying a fighter jet, things happen very fast, so you got to be direct. Let me be direct. Diversification is for stupid people. It's really for people who don't know what they're doing. Now, if that hurt a little bit, let me clean it up with somebody who's a little older and maybe nicer. And it's this guy. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. Now, that's a nicer way of, I said it like a fighter pilot, he says it like a portfolio manager, right? It's a protection against ignorance. If you know what you're doing, you don't need to diversify. Who has told you to diversify since day one of trading? That dude. Ladies and gentlemen, whenever you see the word broker, whether it's a stock broker, real estate broker, yacht broker, aircraft broker, delete the word broker and put in the word commission. At the end of the day, folks, yeah, everybody in this room has probably seen the movie The Wolf of Wall Street or Boiler Room or, The Big Short, whatever it is. Everybody remembers these scenes. They're not made up Hollywood scenes. They happen, right? Dude opens his office door and yells, "All right, guys, put all the little old ladies in tennis shoes into this stock today." Well, sir, we told her to get into this one yesterday. Get her out of that one, get her into this one. It's called churn, ladies and gentlemen. They want you in as many names as possible so they can churn your account and make commissions, period. It's called churn. Churn those accounts, churn them, cha-ching, cha-ching, cha-ching. Every time you click your mouse, they're making money when you send a trade. Now, if you're sitting here going, well, hold on there, Wiz, there's a little company called Robinhood out there where I pay 0 commissions. Folks, it's like playing poker. If you're sitting in a poker match going, hey, I wonder who the rube or the idiot is at this hand, it's you. If you think you're the customer and you're paying nothing, you're a fool. You are the product. Everybody in February learned what I've known for dozens of years about payment for order flow. You might be paying 0 commissions, you're also getting screwed by Ken Griffin of Citadel or Stevie Cohen and good old Vlad from Robinhood. So they're still lying to you, folks. They still want you to trade as much as possible because they get the order flow. So ladies and gentlemen, the only stock that you need to own for the rest of your life is Amazon. Okay, now I'm a fighter pilot and a political science major, so I need pictures. Take a look at the math. This just doesn't even seem physically possible. Okay, look at this. Amazon's revenue growth continues to grow at 30% a year. This is like a hockey stick. Now, the last quarter, we're going to debrief, but that's an outlier. Amazon went from a year and a half ago, we're all going to die in a scandemic, to the best thing that ever happened to Amazon and Jeff Bezos in his life was COVID. Everybody locked down. Here's your stimulus check, order from Amazon. So last quarter's earnings kind of cooled off a little bit, but they cooled off from this. Okay. Oh, darn, they cooled off a little bit. It is a steal to get in Amazon. Now, we'll talk about that in a little bit. Look at the annual revenue by segment, folks. I'm old enough. I've been trading this for, 2 decades? However, a long time. I didn't even hear of AWS until then. Jeff Bezos started up in his condo with a buddy. Amazon Web Services, folks, international, North America. Google recently gave earnings, and they said, well, there's kind of a new big player in the ad space. So we're seeing it's Amazon. Folks, Amazon is in everything, and we'll talk about that more in a little bit. Hell, the Amazon Prime Day is almost like a national holiday. Like, people take off work or have it on their calendars, man. It's like they become a verb. Like, even if you go to the post office or UPS store to overnight something, what do you say? Well, I'll FedEx it to you, even if you don't. So this Prime Day is in the American culture. Now, look at this chart. 10, 15 years ago, if I was sitting in the board of trade and you blacked out this name and said, Wiz, take a look at these metrics, would you invest in this stock? And I'd laugh at you and I'd say, I'd sell my wife and kids and mortgage the house to short this stock. Why? Look at the sales. Oh my God, they're insane. Yeah, they are. Look at the free cash flow. Okay, well, that's kind of a big delta, but still free cash flow is good, not profit. I'd laugh and laugh and laugh, and then I'd be broke. Why? Folks, Jeff Bezos, love him or hate him, is a genius. This is why Democrats are furious with Amazon right now. They hardly make a dime. And you and I can laugh about that, but Jeff Bezos isn't a fool. What does he do? Jeff Bezos has said since day one at Amazon, I don't ever want to make a profit. If I make a dollar last quarter, I failed, meaning he wants to take that dollar and do something with it. buy a competitor, put a competitor out of business, innovate, buy an airplane. He does stuff with the so-called profit. So this is what's funny when everybody's like, oh, well, we're going to tax the hell out of him. He goes, oh, I really don't make that much money. Now, we can all wink, wink, and laugh at each other, but it's a brilliant strategy. And of course, they will get their money from him eventually. And what a tone-deaf space flight or edge of space. Remember him laughing with his little cowboy hat on, like, well, thanks to my employees and you all, you paid for it. That was kind of a cringe moment for me. But anyway, well, here's some case studies. I'm going to blow through them real quick. They always throw these case studies in my presentations. I'm like, how about they try it instead of listening to people that went before them? But we have a ton of case studies. Anyway, I'm not going to sit here and blow sunshine, lollipops, and unicorns all over the place. Let's talk about the potential threats. As a fighter pilot, as an options trader, I take a look at what are the missiles? What could reach out and touch me? Well, there are risks to trading just a single name. Anybody ever hear of a little mom and pop company called Lehman Brothers? How many of you have heard of Bear Stearns? Jim Cramer, right? Jim Cramer knows all about Bear Stearns. At the height of the financial crisis, he reminded me of Khrushchev at the UN. Remember Khrushchev, like the bald dude yelling and screaming and frothing at the mouth and pounding his shoe on the table. Jim Cramer, Bear Stearns is a steal at $70 and it's safe and put your money here. A couple days later, it was at zero. How about pets.com? How about Enron? Folks, I could sit here for the next, 38 or 28 minutes and go through the graveyard of stocks that have gone to zero. I'm not. Here's the common thread between, look at an energy company, a whatever pet company, and then financial companies. The common thread between these companies is what? They didn't own a thing. Enron was a middleman of electricity. They didn't even own the building they were in. Pets.com owned a stinky sock puppet and a domain name. Lehman Brothers, Bear Stearns owned paper, air. They didn't own anything, folks. So stocks can go to zero. Can Amazon? No. It's physically impossible. You ever drive by one of these Amazon fulfillment centers? The one outside of Miami is the size of an aircraft carrier. They own things. Doesn't matter if the stock market implodes. Of course, Amazon's share price can go down. It got hammered after earnings, which we'll talk about. But the point being is people need to either live or work somewhere. And because of the scandemic, most people live and work in the same place. But my point being is Amazon owns stuff. Let me disclose that after I got out of the Navy, I went to fly for FedEx. I was miserable. Hated it. Hated showing up to Memphis at midnight and flying until the sun came up. I left, but a couple of my buddies who stayed, went to corporate, they called me like, whatever it was, however long ago it was. Hey, dude, I just heard Jeff Bezos. He's the Amazon guy, right? I'm like, yeah, he just leased 5 airplanes. I'm like, he's going to do it. And they're like, what's he going to do? I'm like, he's going to give you a run for it. He's going to use you like a leech. And then when he sucked you dry, he's going to do his own Amazon Air. Prime Air is rivaling FedEx, UPS, and the Postal Service. So they own stuff, folks. So can stocks go to zero? Yeah, Amazon ain't. How about this dude? Oh my God, Wiz, it's giving me nightmares or whatever. I put this up here for one simple reason. He was, at one point, the most powerful man in the world. He woke up, or didn't go to bed, depending on who you believe. He woke up one day and grabbed his phone and started taking a flamethrower to Jeff Bezos and Amazon. It's a monopoly. He's a lobbyist, the Washington Post. What happened? The stock kind of wavered a little bit like, holy crap, the president's coming after us. And then it never looked back. 2 or 3 years later, I think it was the last year of his presidency, again, grabbed his cell phone, bigger flamethrower. They're destroying the post office and this and that and the other thing. He was right. What happened? Nothing. So if, quote, the most powerful man on the world couldn't do anything, do you think all of this other stuff can damage Amazon? Department of Justice, criminal probe, antitrust people, antitrust this, and attorney general suing that, and this and that, and MGM. Ladies and gentlemen, last time I checked, Jeff Bezos was the richest man in the world. That probably means he can afford an attorney or two. I'm old enough to remember Standard Oil, AT&T, Microsoft. Do you remember these like antitrust things? From the day Uncle Sam says, we think you might be a monopoly, to them like coming up with a decision is 5, 10 years, folks. I think the AT&T thing was like 12 and 15 years. It takes forever. And by that point, ladies and gentlemen, Amazon is Mercury. What do I mean by that? You smash Amazon, it creates a bunch of little monopolies instead of one big monopoly. A couple months ago, breaking news, or it wasn't even breaking news, it was like a lower news story. It was breaking news to me. Amazon patented or trademarked the name Amazon Pharma. You want a bearish trade, folks? Get bearish on pharmacies, Walgreens and CVS. They will not exist in a year to 2 years. You're going to get a text, go to your front door, open it, a drone will scan your face and drop your prescriptions into your hand. They are in everything, folks, and everything they go into, they explode, they dominate, and they end up putting people out of business. This happened a month or two ago. The Wall Street Journal had a great article that they were destroying small business owners. And here's how. Let's say you came up with a widget. You made a brand new widget. It's the coolest widget ever, and you want to sell it on Amazon. Well, Amazon notices that's a really cool widget and you're selling a lot. So Amazon removes you and says, you know what? We think that's counterfeit, or they come up with a bunch of stuff and say, you need to tell us how you made this. Well, it's proprietary. We think you stole it. Okay, well, let me tell you. You tell them. And then they're like, okay, thanks for that. Oh, and by the way, we think you like steal from your suppliers. So who are your suppliers? Well, they're proprietary. All right, well, you can't sell it. Okay, well, these are my suppliers. And guess what happens a month later? Your widget is now called the Wadget, and it's on Amazon, and they put you out of business. Why am I staring at you from the screen? Because I like to tell people at Top Gun Options, I wear 2 suits. I wear a flight suit. I'll tell you how I feel as an American. I think Amazon and Jeff Bezos are an absolute disgrace. They do that. The Wall Street Journal had this massive article about that. They're like, they are literally destroying businesses. That made me furious. I can't stand that. You know what, Wiz? If you want a friend, get a dog. Then, instead of wearing my flight suit, I'm going to put on my $10,000 Armani and go, that's great. I hope they put everybody out of business. I'm being a little tongue-in-cheek. I still think it's gross, but at the end of the day, folks, my mission at Top Gun Options is to teach you how to make money. You are the pilot and commander of your portfolio. I'm telling you, man, Gordon Gekko. How many times in the movie Wall Street did he quote Sun Tzu, The Art of War, right? So if you want a friend, get a dog. You want to make money, it's in Amazon. So now that I talked about all the potential threats, what are the benefits of just trading a single name? Well, you're going to trade that name and you're going to potentially profit no matter what direction Amazon moves, up, down, or sideways. What do I mean by that? Many of you probably know, well, I know I can make money if the stock goes up, duh. Most people don't know you can make money on a stock going down unless, I know about shorting. I'm not talking about that. I'm talking about options. How about sideways, folks? You absolutely, as an options trader, can make money if a stock is moving sideways. You stay focused on the news and events that impact Amazon instead of a ton of different stocks and ETFs or indices. You stay laser focused and become an expert in Amazon, reducing time spent on other positions. I love throwing one of my buddies down here in Boca under the bus. He's an orthopedic surgeon. He contacted me years ago. Wiz, I hear you're awesome. I need help, man. I'm just swamped trading, blah, blah, blah. I met him at Starbucks. He booted up his laptop. After he booted it up, he logged into his brokerage account and then turned the display around to me. And thank God he's a doctor, because I fell and passed out, man. I almost died. Why? He had, you ready for this, folks? He had 33 positions in his brokerage account. 33. Okay? He tried to brief me on them, and I had to stop him because it was embarrassing. He's like, all right, well, this one, I think this is a pot stock. I don't know what that is. We can come back to it. I'm like, did you just said you don't know what that is? Next stock. I think this is a plastic surgery, something, a buddy put it into it. It's down 50%. I'm going to wait. Listen to this. I'm going to wait for it to come back and then I'll get out of it. I'm like, oh my God, man, how do you know it's coming back to begin with? And by the way, did you do the math? It needs to go up 100% to get even for you. I'm like, stop, doc. 33 positions. This dude spends 8-10-hour days at the hospital, surgery, office hours. He's like looking at his cell phone in between appointments. I'm like, doc, you are insane. He literally is an F4 Phantom pilot. A ton. Folks, I do this for a living. I manage 5 portfolios at Top Gun Options. I do this. I eat, breathe, and sleep it. And I will tell you that 3 to 5 is a lot. Think about this, folks. When I was up at that firm in Chicago, we had a research desk. There was 24 analysts on that desk, and they were charged with being an absolute expert in their names, like 2 or 3 names each. They got stuff wrong all the time. And they had like 1 or 2 names they were responsible for. How do you, as a retail trader, think you're going to manage anything more than a handful of names? Folks, simplify your trading cockpit. Simplify to a couple names, 1, maybe 2, and it's one that will not go out of business. It will go out of business eventually. It's funny, a couple years ago, Jeff Bezos said that in an interview. I was sitting here fat, dumb, and happy trading. I saw Amazon get hammered. I'm like, what the hell? He was at a conference. He's like, oh, Amazon will fail. And of course, the algorithmic bots that hear that type of stuff immediately sold. He's like, but it was kind of a lesson on impermanence. He's like, it ain't going to fail in my lifetime. But he's like, things fail, man. And he listed from the Roman Empire to the horse and buggy to everything fails. But folks, simplify your trading cockpit. Now, if you're sitting here going, dude, this sounds fantastic, but Wiz, I am hardwired. They put a chip in my brain. Does not compute. I have to diversify. All right. Well, here's what I'm going to hook you up with. We also trade in this portfolio the XLY. Folks, this is the consumer discretionary ETF. Why do you also trade this, Wiz? Just as shrimp are a vehicle for cocktail sauce, the XLY is a vehicle for Amazon. Folks, let's just say a quarter of this ETF is dedicated to Amazon. You want to talk about diversification? Let's go after Amazon, Tesla, Home Depot, McDonald's, Nike, Starbucks, Lowe's, Target, Booking, TJX. For all you who are sweating the whole diversification thing, relax. I got you. In this portfolio, we trade Amazon and we trade XLY. Okay. Now, how do we target Amazon and XLY for max profit? Every Monday at high noon on the East Coast of the United States, I knock out a solo Amazon brief. This next Monday at at noon, I will show you how to establish what I call a base position. What do I mean by that? I'm going to hop in that F-35, that Joint Strike Fighter. We're going to go the speed of light out a couple years into the future. In the options world, we can get bullish or bearish on a name a couple years out. So I call that a base position. I'll show you on the options chain in a couple minutes. I'm going to fly out there and show you how to establish one of 2 tactics, synthetic stock or a long call diagonal. Now, real quick, look in the parentheses. What's that say? Protective puts. Folks, I never went flying in that F-18 Hornet and told the chief, hey, chief, why don't you pull the ejection seat out today? I'm awesome. There's no way in hell I could die on this mission. That's the mission I would have died on. I will show you how to trade and employ a protective put. God forbid you did wake up one day and Amazon decided to go to 0. You will be protected, right? There's a Wall Streetism that says you don't find out who's swimming naked until the tide goes out. Well, the tide can be going out here in the fall if we get Delta, Lamb down lockdowns and this and that. We're getting ready for some volatility. But we establish a base position, or like the Marine Corps, a beachhead. I'll show you how to do that. And then what do we do? Well, we're going to come back and trade the front months. What's the front month? You're sitting in the front month, folks, August, September, October. So we can kind of be bipolar here in solo Amazon. We can fly all the way out to the future and get bullish with our base position, and then maybe be neutral or even bearish in the front month. But when we trade the front month, folks, we can employ 3 different tactics. If it's going up, we're bullish with some spreads or calls. If it's going down, bearish spreads or sell some calls. If it's moving sideways, yes, we can make money as an options trader with the tactic called an iron condor. Okay, so let's actually go take a look at my brokerage platform, because it's really interesting to take a look at what happened to Amazon. We predicted it. What did we predict? I predicted that Amazon would have horrible earnings. No, I didn't say that. I didn't say horrible. I said they will have a miss. Let's take a look at a 1-year chart of Amazon. Let's go look at this. Before the scandemic, we were fat, dumb, and happy. Amazon was kind of flat, and then a monster Santa Claus rally, right? Great earnings, and then here you go. February of 2020, we're all going to die of a pandemic. And then what happened? The market recognized that everybody's sitting at home using Amazon. And then Amazon went as quiet as a church mouse, and they were printing money. This quarter's earnings, they made $850,000 a minute in that corner. Almost $1 million a minute Amazon was making. Well, Wiz, why was the stock moving sideways? Do you know what they said during this time? Nothing. What do I mean by that? Usually after an Amazon Prime Day or Christmas or whatever, they step on top of Amazon headquarters and scream at the top of their lungs how much money they made. They didn't say a word except for the earnings. But the earnings, they also threw up smoke screens. The one, they're like, oh yeah, we had incredible numbers. We destroyed it. Oh, by the way, Jeff Bezos is stepping down. Oh my God. He ain't going anywhere. The only reason Jeff Bezos, quote, stepped down is so he doesn't have to get dragged in front of Congress anymore and, beat like a piñata, and he can ride into space. So every earnings since they destroyed everybody has been kind of quiet. This one, though, I nailed. Folks, this was all the record earnings in here was going to cool off. It was like a no-brainer, like duh. It's funny how during this last earnings period, in here, people were looking at YOY, year-over-year earnings, like, oh my God, blowout earnings. I'm like, do you not remember we were all in jail last year? Stop. There's clearly stupid people who trade, obviously, but I predicted this. I said Amazon will see 3,300 after earnings. I got it wrong by $6.48. It went down to like 33.06.48. So I said Amazon 3,300. People, my phone didn't stop ringing. They're like, dude, how did you nail that? I'm like, it was easy. So let me look at the options chain real quick. See, on Monday, when you join me at noon as a new monthly member or annual member, I'm going to hop in that joint strike fighter, and we're going to go out and we're going to get bullish all the way out to June of 2023. And then we're going to trade the front months. Okay. Let me show you my current Amazon position. A little underwater, obviously, since the earnings miss, but that's fine with me. I could not be more bullish on Amazon. So here we go. I am long the 5 of the Jan 23 3,900 calls. $140,000 worth of Amazon in my personal. I'm long 5 of the Jan 23 29 calls. And then so that's my long-term bullish trade. Okay, 5 Jan 23 3,900 calls. And then look what I'm doing for tomorrow. Friday, I sold 5 of the 3,400 calls. What is that doing? I'm trading the front month. I'm saying by tomorrow, Amazon isn't above 3,400. And if it isn't, guess how much money I brought in this week? $4,900. $4,900 for a week's worth of quote work ain't too bad. $5,000 times 52 trading weeks that's about $250,000 just with selling some front month upside calls. I absolutely love doing this. I love trading Amazon. And you look, I got Delta 1, 2, 3, 4, 5, 6. So I'm a little bit of a hypocrite. I do this full time, and I'm looking at 6 positions, folks. It is a full-time job for me. So real quick, because I want to keep Anna and everybody on time, then I'm going to take your questions. This is the name of our service. It's called Solo Amazon. It's actually our newest service here at Top Gun Options. I trade Monday through Thursday. Friday is my foundation day. I do my veterans work and try and put the ladder down to prevent that veteran suicide. So we usually charge $167 a month for my other services because we're trading a lot of different names. But since we're only trading one name in Solo Amazon, it is $97 a month. Or if you want a nice 25% discount today, it's $897 per year. Let me give you that link real quick. I'll go to the page. So I'm going to give you 2 options today. If you want to give it a test flight, I'll give you a little test flight here for a month. And then this is the annual. Obviously, the annual is a better deal. TopGunOptions.com/solo annual. Here we go. Let me paste that in the chat box here. Oh, there you go. Anna beat me to it, man. So that's the annual. Look at her. She is on the ball today. So technically, folks, that's a 50% discount from our other live trade briefs, man. It's a no-brainer. Last year we were up. Last year we were a $140,000 profit in Amazon. A little loss in XLY. Net. We did $110,000 last year in this portfolio. This year to date, I took a screenshot of this yesterday. It's maybe up or down a little bit based on Amazon today. 55,000. What are we in July? Wow. That might work out to be 110. So good performance this year as well as last year. We're having an absolute blast trading with here. So winning trades, 76% in the Solo Amazon portfolio. That's a pretty good win rate, man. Most professional traders look to start around 60%. Why? Because over time, 60% is pretty damn good. 76 is not too shabby if I say so myself. Wiz, every Monday at noon, I work. Well, 80% of our members work at Top Gun Options in our last member survey. Guess what happens? I send out a text and email alert whenever I see a good Amazon or XLY trade. There's a screenshot of the trade alert. I just copy and paste the exact trade from the order ticket. And then in the email that fires at the exact same time, I put in a screenshot of the order ticket. I'm buying this leg, I'm this many contracts, selling this, buying this. There's the risk, there's the potential reward. Everything is in the email. And oh, by the way, about 30 minutes after the brief is over with, I post the replay. It takes about 30 minutes for the replay to render, and then it's posted on the member page, okay? Today, folks, I'm gonna hook you up. If you went to my homepage right now and wanted to buy my manuals, my primary, intermediate, and advanced workbooks, the manuals, they'd cost $197, okay? So this is called like an irresistible offer. If you wanna do a month, just try it out for a month, I'll give you it for $97. So for all the political science majors and Navy guys in the room like me, you just made $100. This is a no-brainer. So here's what you're gonna get. Access to my brief every Monday at noon, text and email alerts, the 3 skill-based manuals that are $197, and then our access to our members only, it's called the Ready Room. I learned more about flying and fighting the Hornet in the Ready Room, kind of like the squadron living room, than I did from any manual or videos or anything, man. So you can get in there, ask me questions, ask your fellow traders questions. It's a great interactive forum, okay? Parmar made 200 grand on 20 call contracts. Kevin, Amazon, synthetic stock, late to enter, up 200%, paid 8 grand, now 24. Diane, up 70 grand with 1 contract. Scott, hey Wiz, up 20 in 2 September and 2 October. Amazon calls this week. I have never been there. Patience, persistence, TGO. Dennis, Wiz, update on my Amazon synthetic call for June 21 expiration from Solo Amazon. It's no longer up 100 grand on 1 contract. It's now up 127 grand on 1 contract. My. So if you want to test fly for a month and kick the tires, you can do it. It's topgunoptions.com/solo-amazon-monthly. $97, come and kick the tires. I'd say anecdotally, 90% of the people that do try it out for a month call us and say, please upgrade me into an annual. So, because it's, as a businessman, I'd love to have you in there month to month. As a bro, as a fellow trader, do the annual, folks. It's cheaper. Okay, so go ahead and Anna can put that link, or I'll give it to you in a second. But I feel like the guy from the Flex Seal tape. But wait, there's more. Do me a favor. Speaking of Amazon, when you click to buy your monthly or annual membership today, it asks you if you want to get the full throttle training, folks. I'm begging you to do this. I'm absolutely begging you. It's only $195. What do you get? 8 of my proprietary training videos. You get access to the last recorded ones, which were last month, and then I'm doing 8 new live sessions next month. 8 sessions, folks. If you're sitting here going, Wiz, I don't even know what a call or a put is. Session 1, session 2. We take a building block approach, just like in Navy flight training, folks. When I started flight training, there was a dude who had never even seen an airplane before. His first flight in an airplane was to flight school from like Montana, right? Me, I had a little flying experience, but guess what? That building block approach turned him into a steely-eyed fighter pilot in a little bit. So please, please, please take the full throttle training. Even if you think you're a Jedi master and you know what you're doing, I'll make you better. I guarantee you. Just the motto of Top Gun Options. You think you're good, I'll make you better. Newest live trading service. They're usually $167 a month. I'll give you $97 a month or $897 a year. TopGunOptions.com/solo annual. Folks, if you didn't learn anything today, clearly I failed, but at least take this. Do me a favor, debrief yourself. Take a look at your portfolio right now and go, holy crap, man, am I flying around in an F4 Phantom with a ton of instruments and positions and this and that? Or should I simplify and end up jumping in an F-35, man? Simplify your trading cockpit, man. Amazon is the only name you need to own for the rest of your life. It's a $3,300 stock, $3,400 stock maybe. So that's why we also trade XLY. It's a $182 ETF, but guess what? It's also your diversification. Folks, this is a fantastic service. We came up with this. It was you, folks like you, who kind of demanded this. They're like, dude. So, all right. So here's the, this is the monthly page. It's Top Gun. Yeah, I'll give you the link here in a second. It's Solo Amazon dash monthly. There we go. Let me double click on that, copy, and then I'll throw this in the chat box. Well, it depends. So first thing, that just went to you guys. The most brokers, you can open a brokerage account with $1,000. I think $2,000 for margin. We strongly recommend here at Top Gun Options that you open an account with a broker that's got a paper trading account. You should always, always, always paper trade. I never went out to the F-18 and jumped in the cockpit after reading a book, right? We had to go to the simulator building. You got to go put in your time in the simulator building. We have people trading huge portfolios. We have people trading $1,000 portfolios. You just scale your contracts differently. But again, I'm not a registered investment advisor. I'm not a broker dealer. I don't play one on TV. You're getting to eavesdrop on what I'm potentially doing, right? But you as the pilot in command of your portfolio, you have to make those decisions in your fighter cockpit, okay? On time, on target, that's what I always like to be. So Anna, thanks for the hospitality today. Thanks for having me. Have a great time on your vacation and be safe. I look to see you again soon.